income generator. Again, my name is Don Kaufman. You are watching a TheoTrade presentation. So to begin with today, we have a risk disclosure. We're not financial advisors nor a broker-dealer. For those of you that have been trading for some time, you will recall possibly I came from the brokerage side of the world. I came from the trading side of the world, then the brokerage side of the world, and now ultimately TheoTrade, but I'm no longer in the brokerage world, which I'll explain here momentarily. This is why you're actually here today. So first and foremost, you're going to discover, first of all, what Ultima trades are. So somebody was just asking here just a moment ago, like, why the term Ultima trades? What is an Ultima trade? We're going to cover that. In fact, we're actually going to talk what an Ultima trade is and why it's ideal for this market environment. So this is about generating monthly income, and in a very, very large way. I'm actually going to show you almost every single trade from this year. I say almost. You're only going to see trades that are what we term Ultima trades here specifically today. So you're going to learn a trading symbol that professionals use on a daily basis to create Ultima trades. In fact, I'm actually going to show you that almost first and foremost here. You're going to learn where and how you can actually find Edge as a retail trader. That's also an incredibly important portion of the beginning of this presentation. Of course, we're going to learn to reap the benefits of high probability trades. We're learning little known secrets in not taking large losses. For those of you, if you're brand new, you've never really done any degree of trading, what I'm actually going to reference today, and you'll hear this term, and I apologize because at times, I grew up around trading, and at times I'll say, certain trade lingo, expecting that everybody understands some of that vocabulary. But you're going to hear the term hedge often today. Like if you don't have your hedges in place, it's going to be a disaster. What a hedge effectively is, it's risk reduction. So whenever I say the word hedge, you're going to say risk reduction, right? So risk mitigation. And we're also going to find products that makes the most viable candidates, and which products are a recipe for disaster. And that's, of course, relating to Ultima trades. Before I go too deep into this, another aspect, and I will talk about this kind of incessantly, we will actually provide you an indicator, and that is the auto expected move indicator. Now, I stress this to you, stay with me right until the end of the webcast. There's an indicator that I'll bring up several times during the course of today's presentation. And to me, it's just not fair if you don't have the indicator, and I'm actually, referencing the indicator. It's called the auto expected move indicator, and I'll explain it in very, very short order. By the way, normally, I tell you what, I take screenshots over here. One of the things I absolutely love, okay, I like actually doing presentations like this live. Markets are open, right? Why? Because I can actually come in here and actually show you the auto expected move indicator. Check this out. Specifically today, put on your big boy pants, because I'll tell you right now, this is the upper edge of expected move, the lower edge of the expected move. This is the start of the week. What do these lines represent? It's how the option market depicts risk for the week, period. That's it. It's how the option market depicts risk for the week. So in this brief example, if the option market says that we're supposed to move, for instance, $7, okay, and I'm gonna throw this up here. So the option market says we're supposed to move $7 higher or $7 lower. We've moved now more than 7. That is of statistical significance. We are outside the expected move, and believe me, people, that matters, because in many cases, it is a sign, if you will, of some inefficiency in the marketplace. Anyway, this is an indicator that I will reference throughout the course of today's presentation. Stay with me right to the end of the webcast, like a $500 value. By the way, it is the single most advanced indicator ever compiled specifically for Thinkorswim. So I'll give you a link to that right at the end of this. All right, onward and upward, a little housekeeping item. Housekeeping! This is skill set. I'm going to fly through a lot of material today. Pay attention. Shut the door, turn off Skype chat, whatever else is distracting you, get rid of Facebook completely, put your phones on silent mode. I literally do all of this. Kick the kids out, grandkids out, the dog can stay. But listen, this is skill set. I'm going to throw a lot at you over the next probably 90 minutes. I hope that's all right with everybody. Most of the time we try to pack everything into an hour, but I threw a lot of extra slides in here. So I'm probably going to be upwards of 90 minutes You took the time to be here, and this is going to be important. So focus on being here. Here's a little bit about me. So the first thing that I do display on here, if you ever need to get a hold of me personally after today, just go support at TheoTrade.com. By the way, this is not meant to be like impersonal. We actually use a common inbox. So we send all emails to support at TheoTrade.com. If you actually put Don in the heading, it'll actually come directly to me. So if you ever need to get a hold of me, by the way, yes, we answer emails, we answer questions. We have 6,000 clients on TheoTrade, and we still answer a couple hours of emails a day. So a little bit about my background. I watched order flow for 15 years. That is in large part why I'm here. And some people, first of all, have no idea what order flow is. That's okay. But here's a little background on me. Number one, I grew up around traders. I had an uncle that was a market maker in the 1970s. That's kind of putting it politely. He started a trading firm out of Chicago. And for those of you that are in the Chicago area, you may or may not know of the trading firm. If you've been there for a while, trading firm was actually called O'Connor and Associates. And the firm started with one seat on the Chicago Board Options Exchange. They built it to over 500 seats on exchanges worldwide. And that was from the time frame of 1976 to 82. By 1992, the firm was actually sold to the Swiss bank. It was a multi-billion-dollar deal. Anyway, I grew up around it. I literally grew up around traders and trading. And a few weeks outside of college, I went to Chicago and I started trading in Chicago. It was only about 2 years after that I had an invitation to leave the professional trading world and go to a startup. And that was a startup brokerage firm. And the brokerage firm was actually called Thinkorswim. So I was lucky number 13 at Thinkorswim. I literally was employee number 13 when I went aboard there. And I actually built the entire education division of Thinkorswim. I helped build a lot of the platform as well. By the way, I'm not a coder. I did design implementation, which is a lot of GUI for those of you that speak geek. So a lot of GUI work on Thinkorswim, and remained at Thinkorswim and was on the executive team. We took the company public 2007. We ultimately went on. The firm was then sold to TD Ameritrade in 2009. I took over all education for TD Ameritrade from 2010 to 2015. By the way, everybody asked this question. Why did I ever leave TD Ameritrade? I had a 5-year lockup clause. So for 5 years, I sat there, with kind of bated breath. And in the 5th year, I actually did exit TD Ameritrade. It was a great exit. Still talk to everybody there. Obviously, TD Ameritrade now has been purchased by Charles Schwab, but that's a little bit about my background. And one of the things that I weigh very heavily into in that background is here's the bottom line. It was great that I traded in Chicago. That was a wonderful experience, and it was a wonderful experience growing up around traders. But bar none, the best experience I ever could have gotten in this industry, watching you. So for 15 years, I had access to everything that you did. And that's what watching flow is about. I literally sat on the backside of Thinkorswim and watched all the order flow go through, but that's nothing. What we really did is actually studied it using big data. We could go in there and tell you pretty much anything about retail clients. You can actually ask a system and say, hey, how many people did iron condors? And if they did iron condors, what was the profitability? What was the hold time? How many people did covered calls? Did they make money in the stock? Did they make money in the options? Any variable, okay, we knew the answer to. And what we ultimately did, both at Thinkorswim and TD Ameritrade, is we drove education by studying what works best for retail traders. And that's exactly what TheoTrade was kind of born on, is the knowledge of what we learned in 15 years in the retail business. And again, we study trades. We know what works and what doesn't. And when I say we, TheoTrade is not just Don Kaufman. We've actually got a number of individuals that do come from the Thinkorswim TD Ameritrade world. What you learn here today specifically comes from watching billions and others' mistakes and the knowledge of what works best simply over time for retail traders. And we're retail traders. I mean, so am I. Anyway, again, if you need to get a hold of me, support at TheoTrade.com. This is the last time I was actually in Chicago in studio. This is TD Ameritrade Network. I still do quite a number of appearances on there. This is one of the more memorable CNBC appearances. They pitted myself against Kevin O'Leary, of course, from Shark Tank over here. I was the short in Apple. He was the long. This was a couple of years ago, but it worked out quite well for me. All right, down to business. What are Ultima trades? Okay, so here's where I'm going to tell you guys right now. This is it's going to start off, okay, fairly deep, and it's going to go deeper. So if you feel like you are Alice tumbling down the rabbit hole, just get ready, okay, because it's going to get good here and going to get good in a second. With that, so what is Ultima? Like again, a couple people were chatting in earlier, like, well, what's Ultima, man? What does that have to do with TheoTrade? Ultima, all right, it has a very definitive meaning. So the first thing I want to mention is that higher volatility in markets, I mean, pretty much higher volatility has resulted in significantly more options premium. Now, I'm already talking about options, and I know that some of you that are listening today have absolutely unequivocally zero options experience. Is that okay for today? Of course. Listen, if you have zero options experience, what I want you to do, okay, excuse me, and if you have zero options experience, what I want you to do is I want you to focus more on, like, if you will, big broad strokes of logic, right? Like capture the big chunks. Like, okay, I understand what he's saying. I don't understand all the little nuances. Okay. So if you're brand new, big chunks of logic. If you are experienced, and I'm gonna tell you right now, even if you're experienced, I'm gonna blow your mind with a couple of things that we're gonna throw at you today. But if you're experienced, you're actually going to try to pick up on some of the nuances. And I'm gonna tell you right now, I move a quick clip for the next 90 minutes. Strap in, because yeah, we're going to go through a lot. Higher volatility. You know, the funny thing is, you can't get people to agree on anything these days, but you can agree on this. Okay, pretty much since the onset of COVID, volatility has been much higher. Yeah, it died down recently, but it's rocking again today. We talk about volatility. Yeah, you know, if it does it for you, we can look at the VIX. Right. So the VIX here. Let's look at the onset of COVID. I said the onset of COVID. Oh man, you got to go back more than a year now. It's just ruining it. It's ruining my chart. Here's the onset of COVID. Here's effectively where we are. So we've been in a continual higher volatility stance in the marketplace. Today is no different, but a little bit of a higher volatility stance. Today we're actually, you know, volatility is kind of rearing its ugly head. So options implied volatility skew is at historic levels. And the volatility of the volatility remains at record highs, which is Ultima. So you're going to learn what Ultima is specifically. Okay. One of the things that people kind of miss in the marketplace right now that has just been rocking since the onset of COVID happens to deal, okay, with a little known symbol called skew. Now, skew is only calculated once a day. See, little tiny dots. Okay, there's dots on my screen. Come over here to style, we'll go to candle, change it to a line chart and make a little bit more sense. Looky. So we're on a 3-year chart. Skew, right now it's record highs. Okay, this is just all of 2020. We're like, what is skew? For those of you that speak geek, okay, first thing, for those of you that are brand new, skew is actually where there's some edge. For those of you that speak trader geek, skew is the differential between the out of the money puts and the out of the money calls. The out of the money puts are trading for a massive premium versus the out of the money calls in index related products. Index products. Index means like S&Ps. Index means the NASDAQ. Okay. Skew is phenomenal right now. People are totally missing it because, and you're like, well, why is that? Why are the puts trading for so much versus the calls? Because everybody's looking at the same thing. They go, market just keeps going up. So they're scared and they're actually buying puts, and they're more scared and they buy puts and they buy puts and they buy puts. It's actually raising the price of the puts. This is not gonna help our situation of me speaking rather quickly. Anyway, it's not gonna help our situation at all. The out of the money puts are trading for a huge premium and have been. The marketplace continues to price in, okay, this wild risk. Now, on top of that, we're going to talk about the volatility of the volatility, which also, all right, remains at record highs, which has to do with what we term Ultima. Now, this is also, I'm going to bring up another symbol over here for you, which is called the VVIX. This is the volatility of the volatility index. So what Ultima, okay, has a lot to do with, and what Ultima trades has a lot to do with, okay, we are actually trading the outskirts of volatility. I'm gonna say that again. Ultima has to do with trading the outskirts of volatility, which I will display here visually momentarily. Here's the VVIX. This is volatility of the volatility. And the line that's drawn on the screen is the 110 level, okay? Since the onset of COVID, we've pretty much been above 110. Prior to COVID, just want to show you something prior to COVID, okay? It was rare to get above 110. You can pretty much count the number of spikes in here pretty much in one hand that are significant above, and this is 10 years, that are significant above the 110 level. We've lived above 110 in the VVIX, okay? What does this mean for you? People are always, okay, they're always like looking for edge. They're always asking about edge. They don't know where to find edge. I'm trying to show you. Okay, so what we basically have here, as I said a moment ago, we're talking about the outskirts of a distribution curve. This is like, just a distribution curve. Let's not freak anybody out just yet. We're not ready to do that. Okay, so this is a normal distribution curve. You're like, that's how I got through school. This is, and I use the same analogy all the time because I think it's absolutely hysterical. First of all, the way this is about my amusement, not yours. In the world, there are really, really good drivers and there are really, really bad drivers, okay? But most of us fit into the meat of the curve, right? But then if you go to certain cities, you're like, oh, everybody is a terrible driver. Where? Los Angeles. So what do? Okay, it shifts the curve. It skews the curve. If everybody's a crappy driver, then you, okay, fit into the meat of the curve, but we skew, right? And there's just not that many good drivers. So the point being is, the skew is tweaked right now, right? It's literally like tweaking the curve. Now that's nothing new. There's always been skew inside of the marketplace. And I reiterate this, that's nothing new. There's always been skew in the marketplace, but this has been resilient, okay? This has been resilient. And on top of skew, there's also the volatility of the volatility. And people constantly ask the question, you're like, so what's this term Ultima? You know what Ultima is? A lot of people go, it means ultimate. No, it doesn't. Ultima is actually, okay, a tertiary Greek. If you know what volatility is sometimes referred to as Vega, but and on top of Vega, all right, there's Vama. So there's Vega, there's Vama, and then there's Ultima. So what are we really trading? We're trading Ultima. It's the volatility of the volatility of the volatility. By the way, we don't call this like volatility cubed because nobody would know what we were talking about, but Ultima trades are actually about the tweak of the skew and where that's advantageous. And that's exactly what I'm going to start to show you here. And this is, as I said, it's going to get deep. It's going to get deep quick, but I was just showing you the skew because this is where edge lies right now in a big way. So how can we use skew to our advantage? Like, it's all really good to like, yeah, man, he's talking about skew. Okay. I told you, you're going to come here to TheoTrade. You're going to learn something. You're not here just to, like, let's do a song and dance and show you a couple of trades and yada, yada, yada. You're going to learn something today. And I'm going to beat you up on this throughout the course of the next hour plus. Skew provides edge in the sale of out of the money options. Okay, because out of the money options should be traded off this nice distribution curve, but they're not. They're tweaked, and there's edge in them dare skew. There is edge in them dare skew. Remember that. So skew provides edge in the sale of out of the money options. And yes, again, I said the O word. I said options. Okay, so many traders are currently buying options and in effect tweaking pricing to be beneficial for premium sellers. Here's the really interesting thing, and I'm going to show you momentarily. How many people here just started trading options like in the last year to 18 months? Okay, because if you look at volumes in terms of options, they've exploded. I mean, year over year, it's absolutely exploded. In fact, here, okay, let's actually get into this. So what you're looking at here, this is Retail Traders Gone Wild. This is April 30th, 2021. This is an OCC report. What OCC stands for? Option Clearing Corp. All right. On that day, we only traded 35, and I say only traded 35 million contracts. The 2021 year-to-date average has been about 40 million. Okay. The previous year, all right, April of 2020, the average is only about 26 million. Now that was actually in the throes of COVID. It was only 26 million. Where did that extra, 14, 15 million contracts come from? And the answer is, it's you, it's retail traders. This is Retail Traders Gone Wild, okay? The only crazy thing about this, all right? The crazy thing about this is predominantly retail traders are doing what? They're buying them, okay? They're on the buy side of options. People, when they learn about options, they go, buy them, buy them, buy them. That's what they do. They buy options, okay? Well, we're going to actually stuff them right in their face. We're going to sell them. Okay. Why? Because you're going to learn to sell options. You're going to learn how to sell options. Okay. And hedge risk. Remember, I said the word hedge. Whenever I mention the word hedge, you have to think about risk mitigation. Many of you, though, have heard through the grapevine that selling options is the way to make money. How many people have heard that? Again, this is an interactive session. Doesn't matter how many people are on. We have a good number of people on today, but how many people have actually heard that before? Hold your experience back, but it's pretty quiet in here. It's like pull teeth. Oh, there we go. Now people are starting. So if you've been in this business, okay, for I don't know, a couple months, few years, sooner or later, you'll start hearing it. You got to sell options if you want to survive in this business. Okay, you're probably going to end up on the sell side of options. And what people are unaware of is that right now, it is incredibly beneficial to be the seller of premium. However, if you've experimented with selling options, you know full well there is definitively risk involved, which is, believe me, I'm going to talk about some of the risks involved. Today's session, separate the myths from real risks, the fact from the fiction. We're actually going to talk in depth about selling options premium. And it's exactly what we're going to do. And again, if you're brand new to options, do not panic. You can absolutely do this, right? Maybe you know nothing about options, and that's okay for today's session. Listen, I'm going to go through some very basic examples, and then we're going to work our way to the extreme. As I said a moment ago, we're going to talk about big, broad strokes of logic, why we're selling options, where the edge lies. Okay. Then we're actually going to get into some more nuances, and I will absolutely show you, okay, trade after trade after trade. In fact, we will probably fire off some live trades today. So one thing, again, if you know nothing about options, I'm going to reiterate this time and again, that's okay for today's session. Another news flash, selling options premium. All right. A lot of people are, and I already see some people chatting in about here. They're like, I'm not sure I have the capital for this. Yes, you do. You can now sell options premium in small accounts under $5,000, and you can do anything you want now inside of retirement accounts. Most people, their brokerage firm limits them as to what they can do, and we can actually teach you a couple of workarounds where you don't need no stinking brokerage firm that won't let you do what you want to do. But you can do this with as little as even $2,000 and in retirement accounts. For starters, though, let's look to grasp the big concepts regarding probability and risk. So let's dive in. So there's many facets to selling premium. One of the things, I've grew up around trading, so I have tendency to use some terminology interchangeably, but selling premium can be referred to in a number of different ways. When people talk about selling premium, they say selling premium, right? They say selling options. They often say this is credit spread. Sometimes they talk about short call and short put spreads, right? They'll talk about delta neutral trading. They'll use the term iron condor, selling naked. Listen, selling premium, it can be used to create both bullish and or bearish positions, but are generally considered market neutral, okay, strategies. So what I'm just getting at over here is like, listen, some of this terminology is kind of interchangeable. Now we need to talk a little bit about probability and profitability. So your trading and everything you do in this business, every way, shape, or form, it's based on probability. Everything you do is based on probability. You and I can create trades all day long with a 90% probability of success, okay? But in doing so, you can still lose money. One of the things that I want to establish right off the bat, people continually ask me this question. So I like to hit it right up front. They go, actually have one of them in the chat room right now. Somebody says, how often do you write? And I'll give you an answer for that, 90-95% of the time. Okay, that's because I'm doing trades that are 90-95% probability type trades. Okay, and I, with all due respect, you can teach anybody to do a trade with 90% probability of success. And there are tons of firms out there that prey on people because they say, follow me, you're going to be right 95% of the time. You need to immediately ask the question, what happens to me the other 5% of the time? Probability alone does not make you profitable. Remember that. You got to remember that. Okay, so don't get caught up in the world of probability. You got to get caught up in the world of profitability, right? Markets are a trade-off. Markets are always going to be a series of trade-offs. Higher probability can be higher risk. Okay, you can be right 90% of the time and you can still lose money. So where can you find edge? Right? And that's what people are here for, right? It's good because get ready. That's what we're going to show you. And we're going to get into some very important details right here, right now. Discovering probability and premium selling tactics. So here's where we're going to go, right? I'm going to give you a fictitious trade, and we're actually going to go into the markets afterwards and create a real one on a similar product. Is that okay with everybody? So by the way, I'm going to get this question at least, there's like 700 people in the room. I'm going to get this question at least 700 plus times. What about margin? Okay, I'm going to throw this out here. Okay, and I'm going to say it again and again and again. You don't have to worry about the margin. I will work with you on margin. There are ways now to circumnavigate, okay, both margin and a huge amount of the risk. There are new products that people are very unaware of, and you could trade them in an IRA. You could trade them inside of a regular taxable account. It's to your heart's content. Margin is no longer a constraint, if you will, in selling options premium. With that, and you should feel good about that because a lot's changed. I mean, again, that was always one of the the defining factors of selling options premium. So here's a $50 stock. Now we're going to go out in this very first example. By the way, every fictitious stock has a name. I call that name stock. Okay, and stock is trading right at 50 bucks. Now, I am not going to buy the stock. I'm going to have nothing to do with the stock. If you're brand new to options, okay, sit back and learn a little bit here. We're going to look at initially the sale. We're going to sell, okay, a 60 call. We're going to say the 60 call is trading for right at $1. Stop right there. I'm just going to draw this down below here. I'm hiding on the camera here, but I know it's a little bit below. I'm going to sell the 60 call. Okay. I'm going to sell the 60 call. And for that 60 call, we're going to bring in a $1, and that's a credit. So one reason I'm throwing that below is because I'm going to draw on the top of the screen a little bit. So I'm going to sell a 60 call. I'm going to sell it for $1. Timeout. Some of you have absolutely no idea what an option even is, which I get. First and foremost, the stock is trading at 50. Okay, what's the stock's name? It's called stock. Does it matter what the stock's name is? And I'm serious about that. You're trading its options. What really matters? What really matters in here? What matters? Strategy. What matters is skew. What matters, okay, is how tweaked the skew happens to be. What matters is Ultima. And that's what this is about. This is about Ultima premium selling. So in this particular case, and for the first example, let's assume that we're going to sell this and sell it naked. Now, some of you that are experienced know that naked, you're like, I'm scared. Hold me. Okay, like get it. That's fine. But in this example, I'm going to sell naked. Now, for those of you that have never traded an option before, you have a $50 stock. I do not own the $50 stock. I am selling a call. But let's first of all just talk about what a call is. Can we talk about this? A 60 call. What's a 60 call if you were a buyer of it? If you're a buyer of the 60 call, it gives you the right to buy the stock at 60. So if you're a buyer of a 60 call, it gives you the right to buy the stock at what price? 60. You can say it. And what do you get for buying that call? Okay. Well, you get the right to buy the stock at 60. Okay. For how long? I don't know. This one could be, what do you guys want it to be? Want it to be 1 month. 1 month. For the next month, you're going to get down on your hands and knees and pray to the option gods. Oh, please, just get my $50 stock above 60 because you have the right to buy the stock at 60. So what happens if the stock goes up? Let's say the stock, okay, what could this stock do? Well, let's say the stock goes all the way up here. It goes to what? It goes to 100. Well, you have the right to buy the stock at 60. Everybody else in the world would have to pay 100. If they have the right to buy the stock at 60 and everybody else in the world has to pay 100, that $60 call is going to be worth a minimum of what? 40 bucks. That's if you were to buy the call. We're not going to buy the call. We're going to sell the call. Why? Because the call has got skew. The call's got skew. And you're like, what? Okay, yeah, because there's skew in the calls too, which I will explain here momentarily. we're actually not going to go out and buy the 60 call. We're going to sell a 60 call. For those of you that are brand new to options, the cool thing about options, you can buy them or sell them just like stock. You're like, is this like selling stock short? A little bit. Okay. But for every buyer, people always go in there into the option markets and they go, look, people are trading puts. That must mean they think the world is going to fall apart. That could not be further from the truth. Okay. You could sell puts and hope the market's actually going higher, not lower. But in this case, you're going to go out and you're going to sell a 60 call. If you sell a 60 call, okay, you don't have rights, you have obligations. You are now obligated to give somebody your stock at 60. Do you own stock? No. So how are you going to give somebody stock at 60? You're not. You're just going to go out and sell a 60 call. And in this example, just for this example, breathe deeply. We're going to sell the 60 call and we're going to sell it naked. Okay, you're out there and you're loving every minute of it. You're going to sell the 60 call and you're going to sell it naked and you're going to collect $1. Now, what do you hope happens? Stock's at 50, you sold a 60 call. You don't want the stock to go to 60 because if it does go to 60, okay, you got trouble. But let's actually give you some examples. So what can happen when the stock's at 50? You don't own the stock. Let's say the stock goes down. If the stock goes down to 45, what happens to the 60 call? Nothing. You keep $1. If the stock stays flat at 50, what happens? Nothing. You keep $1 after a month. What happens if the stock goes clear up to 55? If it goes to 55, you go, ooh, I got scared, but nothing. And I keep my $1. What happens if the stock goes right up to 60? You go, I wet myself. Okay, but the stock goes to 60, nothing. You still keep the $1. When do you start to lose money? You start to lose money at 60 plus the $1 you collected. So at 61 is your effective break-even point. But what happens if the stock goes to 100? Excuse me. If the stock goes to 100, raggy, what were you thinking? All right. Somebody has the right to take stock from you at 60. So they're going to take stock from you at 60. You have to go out and buy the stock at 100 to give them the stock at 60. You're like, I'm down by $40, but you collected $1. The point that I want to make is everybody needs to see this. Do you understand the sale of the 60 call? I don't want to hear as good, as bad, as an indifferent. I just want you to understand the sale of the 60 call. That's all we have to understand in this first example. You can go out and you can sell a call. You can do this now with a minimal margin. You could do this in a retirement account. Don't tell me that you can't sell a call naked in a retirement account because the rules have changed. Your brokerage firm may not allow you, okay, but you can actually do this. It is not, okay, it is not a regulatory requirement that you can't do this inside of an IRA. You absolutely unequivocally can. So for 1 month, you sweat and you collect $1, okay? What's the probability in this trade? Over 90%. All right, so let's actually do this in a real marketplace now. When I say it's a real marketplace, let's go into the marketplace. So the trading application you are currently looking at is Thinkorswim. This is Thinkorswim, but use Thinkorswim. We also use Tasty, works extensively. So we trade back and forth on both of them. But in this case today, I'll bring this up. Now, here, this is a stock, okay, it's Twitter, all right? It's Twitter and it's trading close to $50. You know, it's a funny irony. I couldn't find too many stocks trading right around $50. I was looking at this right before this session, and I'm like, what's trading around 50? My example says 50. What's trading around 50? All I could come up with is like Intel and Twitter. B of A is getting up there, but anyway, if you take a look at Twitter is like, oh, I don't care who you are, that has got to hurt. That was a big move to the downside inside of Twitter. But anyway, we'll open this up. We'll open up like 45-day options here. Okay, there you go. I was looking at this just before. So here's an option trading for right around $1. Okay, look, the market's 95 at 96 cents. It's the 62.5, okay, calls. Okay, could I sell those and collect basically $1? The answer is yes. Why would I want to? Well, not sure you would, but I need you to just understand, okay, this very simple logic. There's a trade, okay, and that trade has a very decent, a very high probability associated with it. Why does the trade have a relatively high probability associated with it? Because the only way that you can lose money, and again, I don't want you to get too deep into probability. We'll get into there in just a minute. The only way you can lose money in this particular position right there is if we get above, okay, this stock has to be clear above 62.50 just for me to start eating into the $1 I collected. But it's got to be above 62.50, okay, precisely 45 days from now. Does that make sense to everybody? All right, let's just worry about what the option is before we go too deep, right? No, nobody. Okay. All right. Let's let us continue on then. Yeah, we're good. Okay. So close that up for just a second. It's pretty quiet in here. Like the most important thing is that you guys actually start to understand some of these concepts. Don't worry about anything other right now. That was for the more basic people. That was for the more basic people in here. Now, as we start to forge forward, okay, all I wanted to do at this point is just introduce the sale of an option. Now we're going to take it a step further. Selling options equals positive time decay. When you sell options, every day that passes sees the dwindling of options premium. Like I always, for some reason, I always think of like the Wicked Witch and they dump water on her. She's like, I'm shrinking. All right, that's how it works in my head. I don't know about you, but that's how it works in my head. As time passes, okay, the options you sold decay exponentially. Okay, let's take just a moment to review time decay. Theta, feel the burn. We're going to feel the burn of theta. So how many people that are joining us today have actually traded an option? Okay, how many people have actually, honestly, have traded an option? Just a yes or a no, just a Y or an N. That's fine. Okay, how many people have actually traded an option? All right, most people in here. Okay, there's one or two no's. Okay, so this is actually awesome. There are so, I'm going to allude to something here. There are so many misconceptions about how options premium really decays. So I'm actually going to show you the theta decay curve, okay? And I'm going to tell you right now, um, decay is not what it seems. I'll say that again. Decay is not what it seems, not what it seems at all. By the way, literally almost everybody in here has traded an option. Come on, people, admitting it's the first step. If you haven't traded an option, just be like, no, I have no idea what you're talking about. And I just got thrown into the deep end of the pool, but that's okay. Okay. It's interesting. So if you haven't, like basically what I'm saying here with options decay is you go out, all right, and you have some option. And that option, for instance, is trading for $2. And sooner or later, the option's trading for zero. But what happens is it decays exponentially. So you went out and you paid $2 for it, and like, maybe a week later, still trading for like $1.85. You're like, I'm okay. By the way, this is the plight of the person that bought an option. They buy this option for $2, right? Nothing happens over, I don't know, a couple of days, and then the option kind of decays a little bit to $1.85. And you literally say to yourself out loud, I'm okay. And then like another week passes, and all of a sudden the thing now, it's worth like what? It's worth $1.50. You're like, I'm getting nervous. And then before you know it, that sucker's all the way down to about 70 cents. You're like, oh man, it's just not moving my way. And then you're like, oh, screw it. And it's zero. If you've never bought an option, by the way, you can always tell who's traded an option because you'd understand that example. So it was, I'm okay too. This is starting to hurt. Ooh, this could hurt too. Oh, I give up. I just give up this freaking thing. That's how options decay exponentially the closer you come to expiration. So options actually decay at what we term the square root of time. You want fries with that? Now we're actually going to move forward to another example. I just wanted to review that because, again, things are going to get very interesting right here, right now. So here's a stock, and this stock is trading at 100. Okay, you're like, ooh, I like this example better. This stock's trading at 100. You don't own the stock. You don't want anything to do with the stock. We're going to go out. We're going to go all the way out here, and we're actually going to sell, okay, a 120 call. Now, you'll notice in today's example, in the initial examples, I'm using call. I'm going to tell you exactly why. It's not because I want to sell more calls or more puts or whatever, but I'm using calls because invariably most new traders or newer traders or people that have been in the business, okay, most actually understand calls better than puts, because when you start talking about puts, they're like, did you buy the put? Yes. What does buying a put do? Buying a put gives you the right to sell the stock. You go, what? Yeah, no, I sold a put. So if I sell the put, I'm selling somebody else the right to sell stock to me. You're like, what? Okay. And it's just people's heads just crack open like a cantaloupe when I start talking about puts. So here we're going to talk about selling a 120 call. And this 120 call, guess what? I'm going to do the exact same thing as I did a moment ago. I'm going to collect right around a $1, okay, credit. Let's assume for argument's sake, we're going to sell it. We're going to sell it naked. Now I'm $20 out of the money. But this one's going to be different. This one's going to be a 90-day option. It's a 90-day option. I'm going to sell, okay, the 120 call, and I'm going to collect exactly $1. Stop right there. Time out. 120 call. I didn't buy it. I sold it. A 120 call will give the buyer the right to buy the stock at 120, but I didn't buy it. I sold it. So I'm giving somebody else the right to take stock from me at 120. What do I want to have happen to this stock? Nothing. Okay. What could happen to the stock? So first of all, I'm going to have to sit here now and you're like, Don, I liked your previous example. The other example was like 30 days. I only had to sweat for 30 days. Now you have me sweating for 90 days. No, because if you do this right, you're going to learn to sweat for the rest of your life. You're always going to have things that are being sold. We're going to go out and we're going to sell an option 90 days out. We're going to sell an option 100 days out. We'll sell it 115 days out. I do not care. Because right now, I'm going to tell you, I'm going to sell the 120 call and I don't want to be threatened. Okay. You don't have to worry about volume. Don't worry about anything right now. We're going to trade some liquid products. So I sell a 120 call. And in this case, I'm going to sell it naked. I collect $1. What happens to the marketplace? First of all, the probability in this trade, this is upwards of 90% plus. You know the probability is going to be high. That's $20 out of the money. If the stock stays flat, I keep my $1. If the stock goes down, I keep my $1. If the stock goes up, I keep my $1. The only place you lose money, the only place you lose money is when we start to crest through 121. Are we okay on this example? Okay, because again, all I'm doing is just rehashing the $50 stock, now taking it to a $100 stock. What's the difference here? I went out 90 days. Why did I go out 90 days? Let me explain you something. Now we're going to go into a live market. Now, you know, the thing is, you can do anything you want in a little fictitious example. It's one of the reasons I like to do these presentations. I really like to do these presentations when the markets are open, the markets are live, the markets are dynamic. Okay, we got options here. Look at this. This is the spiders. By the way, yeah, I brought up the spiders. Why the spiders? The spiders are probably the most prolific product in the entire marketplace. It's a $413 product. Okay, it's the most liquid of liquid products out there. In terms of liquidity, nobody trades more options day to day than the spiders. Okay, no one, not even the SPX trades huge size, but this thing does 3, 5, 6 million contracts every single day. You realize the whole market only does 40 million contracts. This is usually doing about 15% of the volume just in the spiders. So it's liquid. Here, you know what? For just this example, let's get crazy. Let's go all the way out to the August options. Okay, the August options. Follow me out to the August options. Let's find something trading about $1. Just for the, yeah, there we go. This is trading close to $1. This one literally is. Ooh, how about that? Huh? Hey, the 460s, the market's 99, $1. What do you guys think? Huh? Sell it, sell it. We could sell it. No, let's work this one in a second. So we can sell it. By the way, if the market's 99, 101, okay, we could do this. I'm just picking something right around $1, and I'm picking something right around $1 because it makes my example a hell of a lot easier. Am I in the right account? I am in the right account. Fire at will. This is going to fill. Okay, they're going to move the market on me here. If it doesn't fill immediately, they move the market to $1, $1.01. So you're going to see this market move to $1, $1.01. There it is. Okay, now we're 99 $1. So I am actually on the offer. I am now the offer. Captain One Lot rides again. Leave your order in there. So now I am trying to sell this option. I'm going to sell it naked and I'm going to sell it at $1. Now, time out for a second. Okay, don't worry about volume. Don't worry about anything. Because I'll tell you what, this marketplace is fair. It's liquid. It's nice. Okay, so, and by the way, don't even worry about like, am I going to sell calls? Am I going to sell puts? We're going to get to all of that. We'll talk about the hedges, everything. Just have to understand this is the most important example that I'm giving you today, period. I'm going to give you a lot of other stuff, but this is one of the most important examples. Okay, how do I make money on these 460 calls? I'm going to sell the 460 calls. And I'm going to do it naked. Don't you dare worry about margin because I'm going to tell you right now, it's not even in consideration. Okay, margin, forget it. You have $1,000, technically you have to have $2,000 to get approval to even get the right account to do this. So you have $2,000 or $3,000 in your account, you can do this trade. So I'm the dollar offer. If it fills, it fills. If it doesn't, it doesn't. Okay. What is this option going to be worth 30 days from now? I want to know exactly what that option is going to be worth 30 days from now, because immediately when I sell options 108 days out, when I sell something 108 days out, and I'm telling you right now, for this example, for you, I am overemphasizing this. I am technically going out 108 days just to drive you crazy because I know I know that people look at this and they go, you're out of your mind, man. Why are you 108 days out? Because you don't understand what changed in this business. The business has shifted right now. The skew and what we term kurtosis, it's actually out in time. There is huge premium to be sold out here. Now, what's this option going to be worth? It's the 460 calls. Again, I'm going to open it. I want you to look at the 460 calls. They're currently trading for $1. What are they worth? Exactly, assuming all things being equal. The market doesn't move higher, the market doesn't move lower. What's it worth 30 days from now? Open the 73-day options. Now, it's not perfect. Is that almost 30 days, right? It's exactly basically a month from 108 to 73. Am I right? So open it up, open up the July options and look at the 460 calls. They're trading for basically 36 cents. You're like, what? That's insane. For 30 days, okay, in this case, let's call it 35 days. In 35 days, I can make over 60 to 65% premium if I know exactly where to look. If I actually know, okay, the skew, if I actually know, all right, where the decay is actually happening. People very often, they believe they have to sell shorter dated options. In this case, I can sell really, really far out in time. Now that was assuming all factors being held equal. And I am so far out of the money. I mean, I am ridiculously far. I mean, the market has to go to 460 just to threaten me. Oh, hurt me. And there's ways to hedge. There's ways to mitigate the risk. You're not just going to do this naked. I don't want you to think you're going to do it naked. Okay. But if you can collect 50 or 60% in 30 days, you're not sweating for 108 days. You go, well, what do I do after that? Oh, I don't know. Maybe you should close the position and just do it again, and then do it again, and then do it again. Who says you got to hold the thing to expiration? That's just downright stupidity on most people's part. You're holding stuff to expiration. Okay. Too much risk. You got to understand there is good premium to be sold into the future. And again, I am emphasizing this because I'm intentionally going out 108 days, which drives experienced traders crazy. Okay. The mathematics of options, they don't lie. Okay. Why sell options so far out in time? You may have noticed in my example, I sold options a few months out in duration. Typically, traders sell shorter dated options. Therein lies why you're actually tuning into the webcast and why there is specific criteria. And that specific criteria is of critical importance. I mean, criteria is what we do here at TheoTrade. Okay. What our team does here is literally studies. Where's the best premium to sell right now? High probability, lower probability? Should we do short dated options, long dated options? Okay. There is crazy tweaks right now, though, in option pricing. There's always going to be edge in this business. You just got to go out there and find it. Okay. You guys want to do another example in here? Because again, all I wanted to do is throw up those 400 puts. And you go, well, where else could I do this? Okay. We could look at a product like IWM. IWM, this thing is rocking in terms of volatility. I'll do the same thing. I'll go 108 days out. Now forget about puts for a second. Please forget about puts. And I'm telling you, forget about puts because I don't want to confuse anybody. Here's the same exact thing. And here's the irony. This is the 260s. I just picked an option around $1. I'm not going detailed into the criteria right now, but I'm picking an option right around $1. The market, it's only 4 cents wide. I could split this market. Okay. I could definitely sell these things for like 260 over here. We're way out of the money. We're 108 days out. So question is, what are those 260s worth? Okay. When there's only 73 days left. So we'll fast forward. What are those 260s worth? Okay. Here you go. In this case, they're worth about 44 cents. So what can I make? You're making just over 50%, about 55 to 56% profitability for holding a position for 30 days. Okay. What do you do after you make 50%? I don't know. Do it again, and then again, and then again. Okay. I'm just showing you that this is viable. Okay. In X number of products. And today the volatility is up. So suffice to say, another idea for you. You can go 108 days out. And of course, somebody invariably says, well, if you're doing this on calls, watch this. We're gonna cancel that order. We did the the 460s here. So I'm gonna sell the 460s, and I am simultaneously, I'm gonna go out of the money in the puts. Okay. Let's go way out of the money. I love making points like this. Go way out of the money. Sell these 310s at the same time. This says actually done for a net credit. I could sell the call and the put for a net credit of $3. Fire at will. Okay. So immediately, boom, the order's working. Is it filling? No. Give it time. Give it time. I'm now working a strangle. I'm not going to just go out there and leave this thing unhedged. because what I want you to understand is these trades, any one of you right now, any one of you, you can get onto a trading application right now. Okay, you can pull up what's called probability out of the money. I helped build the calculations on Thinkorswim. Believe me, I know this is probability out of the money. And if you look at that one trade that I just routed a moment ago, those 460s, that has a 93.5% probability of success. 93% of the time, you're going to make money. What's going to happen to the other 7% of the time? That's what you're going to find out. Okay. You can't just go out there and just sell premium naked. Even if I tell you it is spectacular, there is juice in this market. Juice basically is premium. You got to harvest the juice while you can. Premium selling hasn't been this good since 2011. 2008, 2009, 2010, 2011 was the last time the juice was this hot. Okay, it's awesome right now. It's awesome because there's so much skew inside of the marketplace and we can sell duration. Okay, it's utopia selling 108 days out because you don't have all the risks embedded in the marketplace, right? That you do of selling like 30-day options. Listen, okay, this is what we're getting into. Higher probability sale of premium. But there's the 90% probability, and then there's the 10% hammer. Okay, like listen, doing trades with a 90% probability, it sounds wonderful, it sounds great. But 10% of the time, the market does what? Rips your face off. Now that's trader lingo for you just got hit by a Mack truck that you didn't even see coming. That's what rip your face off basically means. When you trade high probability strategies and you're wrong, you get hammered. You get, just annihilated. And the marketplace is just evil enough, okay, to let you do this multiple times. Let me give you actually the plight of a trader. All right. So let me just give you the plight of a trader in here. So bear with me here momentarily. This is of critical importance in here. The plight of the trader. First of all, those of you that have traded a little bit, which is actually most of you. How many people here have actually done stuff like iron condors? I just want to make a quick point with this because there's a lot of people that are probably tuning in right now and they've actually sold some option premium in the past. Okay. And you sold option premium and you used what's called an iron condor. And for those of you, I threw this slide in here and I know that you've already read through the slide, but neither here nor there. I'm actually going to give you what I call the plight of the iron condor trader. Okay. What an iron condor happens to be, for those of you that are new, you sell out of the money options and you buy other options to hedge the options you sold. What happens to people, though, when they do these trades is they do trades with very, very high probabilities of success, okay? People go out and they sell an option, right, for $1, and they can lose as much as 9 or 10 on the trade. So when you're doing high probability trades, okay, you go out and you learn this strategy called an iron condor, and you sell the iron condor and you collect $1. Okay. And I'll tell you what, you did it the first month and you did it for 1 month. You did it the first month. You're like, woo, unscathed. That works for me. So all of a sudden you made money and you've done a bunch of other strategies and you've lost money on them. So you went into this iron condor and you made money. It was pretty easy. You basically sold something. You did absolutely nothing. And by the end of the month, you made $1. So what do you do the next month? You're going to do the exact same trade the next month. And you do the same trade, same strategy the next month. And you go, holy crap, I actually made another $1. By the third month, you're no longer doing one contract in the spiders. By the third month, you're like squawking your feathers and you've actually stepped up into the SPX and you do a 1 lot in the SPX and the market gives you another $1. You're like, yeah, by the way, the SPX, for those of you who don't know, is 10 times the size of the spiders. Neither here nor there. By the fourth month, yes, the market lets you get away with this 4 times in a row. By the fourth month, you're like, Buffett, here I come. By the fourth month, you're actually out there selling iron condors and you're selling them in the SPX. And instead of doing a 1 lot in the spiders or a 1 lot in the SPX, now you're doing a 10 lot, a full 10 contracts inside of none other than the SPX. And the marketplace goes, come on. It waits for the fourth, maybe the fifth time. And then it just goes, train wreck. And literally you lose everything that you made in all the previous trades. Then you lose a huge amount because you've been scaling up and it's just an absolute disaster. Okay. And when people actually hear me talk about this, they're like, holy crap, have you been looking at my account? The answer is yes, I have. For 15 years, I watched people's accounts. Think I don't know the plight of the iron condor trader? You build, you build, you build, you build, you build. I've seen people build for 18 months. I've seen people unscathed for 18 months. And on the 19th month, they lost everything. It's absolute, okay, sheer and utter insanity. Okay. It's sheer and utter insanity in that point. But the bottom line with this is, again, we understand what the retail trader does. By the way, has anybody actually experienced that, where you made money, and then you get absolutely hammered? Because that's where I say 90% sounds great, but the other 10% of the time you're going to get absolutely, crushed in there. And when I bring up the sale of premium, okay, when I bring up the sale of premium specifically here, we're still working orders. I'm working the order in there. This is an order I don't even need. Okay, this is an order right here where the market's $2.99. I'm actually working at $3. We'll work a couple of these here in a moment, but I want you to understand that's not what we're in store for. We're not in store for the make money, take a huge hit. We hedge. But then for those of you that are a little newer over here, 90% sounds great, but then the 10% hammer hits. Okay. But then a lot of people turn around and they try this all again. They try this with an iron condor and they make money, take a huge loss. And then they come in there and they go, whoa, I learned something else. I learned how to fix a trade. I can fix it. I know I can fix it. Fix a really, really dirty word in this business. 15 years in the brokerage business. I'm totally a cynic regarding good trades gone bad. People try to save trades that have gone against them. Listen to me very carefully. Anytime you're fixing a trade, you're adding more risk to an already losing trade, and you're racking up transaction costs. You tell me how you can fix a trade without incurring more risk. You tell me how you can fix a trade without racking up more transaction costs. Hey, even if transaction costs are free, you're still racking up more risk. Yes, some fixes work, but the very notion of fixing a trade throws good capital after bad. Think about that for a second, right? We don't want to go down that road, right? You got to throw it out like yesterday's trash. Listen, take a car, and the best analogy I can give you for these trades, you take a car and you drive it off of a cliff, and then you bring it to a body shop. And the body shop is going to tell you the same thing about the car that I'm going to say about your losing trade. It's a piece of junk, let it go. I mean, you think about that. Literally, you took a car, drove it off a cliff. You bring it to a body shop, and they're going to be like, that's a total. What's a total? Well, you paid $35,000 for the car. If we fix this car, it'll cost us more than $35,000 to fix the car. Therefore, you have a gigantic piece of crap. Do you want that fixed? And you go, yes, I do, sir. And I go, what is this, an iron condor? Okay, do it right. You got to learn, okay, how, okay, to correct good trades gone bad. This is about hedging. Now we're going to get a lot deeper. Are you ready? Because I'm going to show you kind of the full Monty over here. There are several things that you must understand if you're going to go out and sell options premium. There are several things you must understand about Ultima premium. Ultima premium, okay, requires, all right, a hedge. I'm going to say this again. Ultima premium requires a hedge. What is a hedge? It's a risk reduction metric. It's something that you're going to have on in your back pocket, okay? Because when a rainy day strikes, that could be today. I'm watching the S&Ps on another screen here, but you got to have something in your back pocket, because when the rainy day comes out, you better pull out that card and be like, oh, yes, I have a hedge. And if you don't, it's over before it started. People all the time, they say like, no, man, when the market goes bad, don't you worry. I'll get out, man. It'll be fine. You ain't going to get out in time. What happens when you wake up and the marketplace goes limit down, all this craziness hits? What you have to understand is this market is far more unpredictable than you can ever imagine. And when you sell options premium, okay, you need to admit that right up front. You need to admit, if you're going to sell options premium, okay, you don't know, you don't have control. You're along for the ride. You're going to use one of three hedges. One of three hedges. What are the three hedges? And I'm actually going to throw them up here. 1, 2, 3. The first hedge, probably one of the more prolific hedges we use. It's called an RTS. That stands for risk, twist, spread. Risk twist spread, it's an outlier type trade. If the market crashes, the risk twist explodes in value, literally explodes in value, saves the day, okay? Number two, only one of these is necessary. The number two trade, okay, is actually what we call a VIX vol spread. What's a VIX vol spread? Just like it sounds. It is a spread that is actually done specifically in the VIX. Why is it done in the VIX? Well, what does the VIX do if the market crashes? You tell me, what does the VIX do if the market crashes? Where does volatility go in a crash? Markets crash down, volatility goes where? Up, okay? Goes much higher. Use a risk twist spread, a VIX volatility spread. Last but definitely not least, okay, the mighty gamma iron. The gamma iron is actually a risk reduction metric for markets that explode higher. Gamma, okay, you're going to be long gamma in this case. What that basically means is you're going to make money if we explode higher, okay, to offset the losses of having sold a call. Let me actually show you in context. Okay, where are the S&Ps right now? Let's just put the SPY, and we're actually going to draw this in here, okay? This is the SPY. And the SPY, let's say, is trading right at 415. I know it's a little bit below that, neither here nor there. And by the way, yes, I'm watching markets on the opposing screen. So the SPY is at 415. What is Ultima trading? Like net, what does it amount to? Okay, Ultima trading is going out there and selling, all right, out of the money premium. So we're going to sell out of the money premium, and we're actually going to do it on both sides of the marketplace. For example, we sell, okay, like I just did a moment ago, the 460 calls. A couple days later, I may actually elect to sell, okay, the 480 calls. I may also be able to sell, okay, the 450 calls. Could be similar expirations, could be different. All I'm trying to do is emphasize I am layering in a couple of positions in here simultaneously, okay? Simultaneously, I might be out there, sell, okay, something like the 310 puts. I may sell what? The 290 puts. I may sell, for instance, the 330 puts. So I am what? All of these different positions. These are all minuses. Why are they minuses? Because I'm selling. What's the risk? If I just left that alone, what's the risk? I'm going to tell you exactly what the risk is. If this marketplace were exploding to the upside, we can go from 415 to 450. If you don't think we can, I mean, you haven't looked at the marketplace recently. And if you go from 415 all the way down to what, 300, okay, you're going to feel the fear. It's 100 points out of the money. You are going to feel the fear at that point. You can't just sell premium and sell premium naked. You got to understand Ultima. And what Ultima is, it's the tweak, it's the skew. And what we're going to do is layer in just a handful of little hedges. Okay. Let's first of all imagine that the marketplace crashed. As the marketplace crashes, you have, okay, a lonesome VIX volatility spread on. Okay. What does the VIX spread do when the market goes down? It puffs up. Okay, the VIX spread is literally mitigating risk as the marketplace is crashing. And you go, oh, save me. Listen, the VIX spread can give you more than enough time. That initial burst to the downside, that marketplace starts to fall apart. The VIX spread puffs up, okay, saves your proverbial behind, giving you more than enough time to either exit the positions or weather the storm, okay? You have to have on, though, again, a risk mitigation tactic. Without it, you're nuts. You're just out there swinging in the breeze. What's the gamma iron? The gamma iron is actually what we term an inside hedge. We have to actually break through the gamma iron to the upside before you can even get to losses up here, right? This is what Ultima premium selling is about. It's not about one trade. Okay. And people look at this and they go, well, how come I have to in the spiders? Listen, time out. You don't have to worry about the product. Right? I'm going to show you a bunch of different trades that I've done. I'll do this, okay, in a lot of different products, but the product, when I say the product, it's got to be the spider, it's got to be the IWM. It doesn't have to be any of those. But whatever you're trading has to fit the model criteria. It has to have the skew. It has to have the kurtosis. It has to have certain variables in place to make the trade worthwhile. Okay. That is what selling Ultima Premium is about. And when you look at this in context and people go, whoa, what are you doing right now? Okay. I'm building a portfolio. I've got lots of positions in here, lots of, it's a mixed bag grab here, okay, of positions, but I'll show you everything. By the way, it is full disclosure at TheoTrade. You will see every position that I do, profit and or loss, okay, margin accounts, portfolio margin accounts, IRAs, profit and loss to your heart's content over here. I'll even break down, this is an IRA, I'll even break down by account style. Okay, this is a portfolio margin account, a little bit more flexibility, got some bigger position size in here, but everything, okay, is Ultima trades that I'm actually encompassed right here, right now, right? And again, this is why you want to sell premium. Premium can now be sold in a small account, even under $5,000. And that's one of the big sticking points is people look at this and they immediately go, I can't do what you're doing. You can. You absolutely can. All right. This produces positive theta decay. So all things being equal, we're actually selling premium and actually generating that premium. This may also enhance existing positions. If you just own a lot of stock, whether you're long, whether you're short, okay, it's going to work out. It's going to work out very, very nicely. Okay. Provides a high probability of success. By the way, I want to go back to this, may enhance existing positions. Listen, if you have a 401k that you can't even touch, and some people have 401k, literally they're like, oh, I can't touch my 401k. Yes, but in another IRA or inside of a taxable account, could you sell premium against? Could you sell premium against it? By the way, somebody's worried about the pattern day trader rules. Gone if you know where to look. That's right. Don't ever have to worry about the pattern day trader rule. Remember where I come from. 15 years in the brokerage world. I call it regulatory arbitrage. Nobody is out there teaching this stuff because they simply do not understand, okay? Some really simple concepts that have changed. By the way, this has only changed in like the last 18 months. And then the Ultima really got tweaked after COVID, and that's not going away. That is just not going away. I've never seen Skew this good. No one's seen Skew this good for this long. You just have to know where to look for it. You got to know what time frame to use. But the may enhance existing positions. Can't overemphasize that. I just saw a statistic like everybody else did. Everybody read the same article that I did over the weekend. 41% of US wealth, okay, is tied up right now in the market. They're only going to take one bad day in the marketplace. Everybody's like, the economy is wonderful, the Fed rocks, and then one bad day in the marketplace and it's over. 41%, okay, of all wealth is tied up in stock right now. It's the highest number by far. When I was in the brokerage business, the highest number we ever saw was about 29%. And when it got just slightly above that, it was ugly after that. Anyway, neither here nor there. It doesn't mean the market's going to get ugly. I'm not here to sit and predict direction. I'm just here to actually, trade and sell some premium, get back, get hedged, duck and cover. Provides an extraordinarily high probability of success. Most of the time, you're going to do nothing with these Ultima trades. Okay. Most of the time, you do nothing. And you will eventually have a marketplace that tanks. But what are you going to have? Okay. You're going to have your little card in the back pocket that says VIX vol spread. In fact, okay, I don't mind showing it. I actually listen, this makes me a more accountable trader. Like here, there's a VIX spread tucked in here. There's a little VIX spread. It's only got 14 days left, but there's a lot of VIX spreads in here. Like it's down 74%. Okay. The VIX spread is a hedge. A hedge is a sacrificial lamb. I sacrifice my VIX spread, okay? I sacrifice a VIX spread for the better good of the rest of the portfolio. And every couple of months, I re-up and I sacrifice another VIX spread. Why? It's for the better good of the portfolio. You never need to buy or sell the stock. You see, I have a lot of stock positions in my account. That's up to you. You never have to buy or sell stock, okay? I don't mind. I like trading some stock from time to time, okay? I'll show you everything. Again, and you could be wrong on market direction and still produce profitable trades. One thing you haven't heard me talk about, okay? One thing you just have not heard me talk about at all is what about the MACD and the Fibonacci and the Bollinger Band? What about Bollinger Bands, Don? Okay, I'm not a directional trader. I'm a quantitative trader. What quants do pretty much for a living is we dig, we find edge, okay? We go after it. We're just digging for the edge. We find it, we go after it, okay? We exploit the living hell out of it, and then we move on. It's like the Borg, and we'll continue to do that. So Ultima right now, this for me is just the beginning. Okay, this is actually the beginning of Ultima, not by any close standards to the edge of it, because we actually have volatility coming down, but the skew has actually gotten bigger, which is shocking right now. The edge today is better than it was 6 months ago. It's actually gotten better, not worse. Listen, you could be wrong and still produce profitable trades. This is not about directional bias. I'm telling you, you need this in your life. I know markets have gone straight up month after month after month, and everybody gets what? Complacent, subservient to the marketplace. Sooner or later, the bell goes off, and the bell, you feel like Pavlov's dog. You're like, we're going up today. Okay, we're going to buy the dip. All right. That's not what this is about. It's never what the marketplace is about. Sell some premium, get back, get hedged, and live to tell the story. Selling premium could potentially bring in consistent returns while minimizing your risk. I can't stress this one enough. When you're selling premium, you're thinking about like, how am I going to make money every 30 days? If you sell an option with 100 days and you buy it back when there's only 70 days left, that's 30 days. It's just not the 30 days that you thought it was going to be. Would you like to learn how to sell premium and minimize your risks the right way? So let's talk a little bit about criteria. All right. So one of the things that I'm going to emphasize, and I'm going to show you some live trades, but we're going to talk in depth about criteria. And what criteria boils down to, it's literally like a checklist of how do I actually find Ultima? People, by the way, are asking this in the chat right now. Is somebody's asked about pattern day trader rules? No problem. Okay. No problem in pattern day trader rules. Don't worry about margin. Okay. People are asking about the different time frames, which products. That's what criteria is. Criteria is not saying sell Ultima trades. Criteria is zeroing in on precisely the right trade. I'm going to run through, okay, live trading examples. When I say live trading examples, right, variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts. That's the 5th time that I've actually put that in the PowerPoint because it's always a sticking point. You're like, I can't. You can, and you should, and you will. All right. Now I'm going to show you live accounts. This, we're going to start way back when. I'm going to start way back when because, by the way, I love talking about Tesla because what's more fun than to talk about Tesla, right? People are out there and they're like, I'm buying calls on Tesla and I'm buying stock on Tesla. Me, I'm selling calls on Tesla. Okay. No problem whatsoever. And I'm actually going to take you through what this is. What you're looking at over here, it's all the way back in November and December. Okay. Don't worry. By the way, I'm going to take you through a quick run of trade after trade after trade. I'm going to spend a few minutes on the first one and then I'm going to fly through like 30 or 40 examples because I want you to see how consistent Ultimate Trades happens to be. You're invariably going to ask me a very simple question. Do I show losing trades? I would. Okay. I'll tell you what the losing trades are. Every couple of months, I lose money on a VIX trade. Every couple of months, I lose money on a risk twist spread. Why? They're my hedges. They're my sacrificial lambs. Okay. In the last few months of trade, which you will see, every position that I've done in the last few months, you will see. Okay. This has been a cakewalk in the last couple of months. Even with the big up move, a couple of down moves, it's been a cakewalk. Why? We haven't been threatened. Remember, we're trading 90, 95% probability trades. Why would you expect anything otherwise? Let me show you in Tesla. In Tesla, I'm actually selling calls. If you've never seen this, what you're actually looking at here, this is an account statement taken directly from the platform Thinkorswim. This is the exact time of execution. Okay. This is the opening position. This is the closing position. In fact, I'm going to highlight this even more. This is the opening position. This is the closing position. It's Tesla. This is the option traded 950 call. Okay. This is the price that I sold it for. This is the price that I bought it back. It's an 83% return. You could do one contract. You could do 10 contracts. You could do 100 contracts. If you do one contract, this is $390 of a credit. Okay. You'd be buying it back for what? A 65-cent debit. Net, what do you make? About $3.15. But what matters is obviously the returns. Okay. Are we okay with this? And I also want to show you exactly where this comes from. If I go to my monitor tab here and I go to my account statement and I type in the spiders and you see 30 days, let's go and see the spiders of everything I've done in the last 90 days. Okay. So I trade the spiders. I have 25 fills in the last 90 days, every open, every close. So instead of having you look at the account statement here, I just kind of copy and pasted the account statement into the slide deck. Is that okay? And by the way, I will gladly show you guys every single trade that I do in here. So in this particular trade, I made 83%. In the next Tesla trade, I made 90%. And this was actually opened, what, December 14th, closed December 21st. Why am I showing you this? Okay, I'm gonna tell you exactly why. Why Tesla? Why now? Okay, what I'm amused by in Tesla and what really makes me want to show people the trade in Tesla, this is exactly where I opened the trade, okay? And here is where I closed it, right there. So I opened the trade here and closed it here. The stock literally moved up, okay? You see the dates, the stock moved up and I still made a 90% return. You're like, how's that possible? Skew. Skew has been huge. I did the same thing a couple of weeks before that. Skew was huge. Skew was huge again. Here's another Tesla trade. Again, I wanted to show you a couple Tesla trades because this is the 1260 call sold for 450. Look at the run. It's only a 3-day window, 58% return. Now I'm going to go into bonds. You're like, what? You're just talking about Tesla. Now you're talking about bonds. Yeah, why can't I do this in bonds? Nobody said you couldn't trade bonds, right? Yeah, well, maybe you should look at them. So on bonds, I opened this January. By the way, I'm going to give you pretty much the entire quarter. The first quarter, I'm going to give you every single trade in the first quarter, and I'm actually going to take you right up until yesterday. So here's actually bonds. So in the bonds, what did I do? I went out and sold the 161 put, bought back the 161 put. I sold it for 14 ticks, covered it for 6 ticks, 57% return. Next trade, it's another bonds trade. By the way, yes, I will trade the same product again and again and again and again. I will trade the same product till my hands bleed because I just do not care. I will sell anything, okay, that has skew, that has the kurtosis that I'm looking for if I can make returns on it. So here's actually another bond trade. This bond trade was actually opened the 11th of January, closed on the 13th, sold it for 15 ticks, bought it back for 7 ticks. Yes, bonds still use ticks. Why? Because it's confusing. No, bonds trade in actually fractions. So opened it for 15 ticks, closed it for 7 ticks, 53% return. Next, IWM short call. Yes, I trade the IWM. This is opened actually on January 25th, closed on the 27th, 62% return. I was open for $1.46, closed 56 cents. I'm going to start ripping through fast now. You ready? IWM sold the 240 calls, bought them back. By the way, look at the time horizon here. This one's not that far out in time, still collected a 53% return. Okay, this is actually another Tesla short call. By the way, timeout, that's the Holy Grail trade. It's the Holy Grail trade because I actually sold the 1575s. The 1575s stock was only trading at about 800-900 at the time. The stock would have had to double for me to lose money on there. It would have had to been a $1.5 trillion market cap on Tesla for me to lose money. This one I sold for 266, bought it back for 64 cents. Again, I want to reiterate something. What I'm doing in here, you see Tesla, right? Okay, if you see Tesla, let's go to my account statement. Let's not go back 90 days. I don't trade Tesla that often, but let's go back, for instance, 200 days in Tesla. What have I done in the last 200 days? Okay, I just said it's the Holy Grail trade. There it is. There's your Holy Grail trade right there. Okay, I opened it on the 26th, closed it on the 28th. I opened on the what? I just opened one recently and just closed it again. They're the same trades. Again, you just keep going back to the well, do the exact same thing again and again. Spiders, here's a short put. Opened actually in late January, closed just a few days later for a 60% return. I mean, we're all the way out of 279 put. You realize the spiders right now are in the 415 level. Never even thought about being threatened on this one. Okay. Here's another one, SPY short put, 275 put, closed for a 50% return, open for 241, closed for $1.20. Here's another SPY short put. Again, if it works once, why won't it work multiple times? No, it will. Okay, sold for 284, covered for $1.39, 51% return. Here's another SPY short call, opened for $1.20, closed for 52 cents. It's a 57% return. Okay, moving on. Now we're having fun. By the way, look, this is in February. This is in February. I opened the trade and I sold the 435 calls. Just closed those late February. Okay, 435 calls for a 49% return. So again, you can see the time frames. This is the May expiration. So I'm on 90, 100 days out. Another SPY short call, 430 calls. So we're $5 out. As I said, I'm just staggering the trades. Okay, 50% return. Here's a 62% return inside of a short call for the QQQ. Here's another 50% return, short call on the QQQ. We're still in the month of February. QQQ short call, 50% return, 385s. Look, I'm just showing you there's a 365s, 375s, 385s. Okay, now the 390s. Stagger, 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 stagger. People that place one large trade are going to take one large loss. Okay, staggering the trades out over time and price. And again, if you're looking at the QQQ, yeah, I'm active inside of the Qs. Just to show you, there's everything I've done over the last 200 days inside of the QQQ. Open, closed, open, closed. Look, to open, to open, to open, to open, to close, to close, to close, to open, to open, to open, to open, to close, to close, to close. Every single position is in here leading up to literally yesterday. Whoops, swing and a miss. Okay. Let me put in the execution time over here. This literally leads you to yesterday's date, May 3rd. So QQQ short call, QQQ short call, 53% return, QQQ short call, 57%, IWM short call, 56% return, 50% return, IWM short call, 54% return, IWM short call, 265s. Look at them, 240, 245, 265. Okay, here's the QQQ. Now we're back to a 245 put, IWM short put, 151 puts. Okay, we're just ripping right now. We're almost through March. Here's the 47% return on a 163 put. Here's a QQQ short put, 217 put. Here's another QQQ put, 51% return. Here's a bonds short call. Okay, I don't stop. I just go product to product to product to product. As I said, I'll squeeze juice till you can squeeze no more. Did this one for 12 ticks, covered it for 6 ticks, exactly 50% return. IWM short call, 51% return. Sorry, 54% return on the 265s, then a 51% return on the 275s. Then I did a 50% return on the 265s. Okay, by the way, I didn't show you IWM. So here's all the order history off the QQQ. Let's go to IWM. What have I done on IWM? As I said, okay, look, to open, to open, to open, to close, to close, to close. There's a lot of activity, by the way, in the IWM. Okay, I am one crazy monkey in the IWM. I like it. Okay, all of these closed. Here again, like clockwork, though, we're opening and closing, and you'll see some iron condors in here. That's actually a hedge. That's the gamma iron. Shh, don't tell anybody. Okay, so here's the SPY short call, 50% return, IWM short call, 53% return, bond short put. I'm just going back and forth, QQQ, spiders, IWM, okay, bonds, and it just returned, IWM short put, 50% return. Now we're actually getting a little bit more recent. As I said, I'll show you everything in the portfolio, IWM short put. These are the 163s. If you look back, there's the 157s, the 163s, the 150 puts. Here's a bond short put of the 147 variety. Another bond short put, okay, 73% return. By the way, this is the 147s, this is the 153s, then the bond short put, the 154s, okay, then the 148s. I was scattered everywhere in bonds. IWM short call, the 260 calls, IWM short call, the 250 calls, IWM short call, 255 calls, okay, I'm even skipping trades. Oh, here's the Mo. Mo actually had some skew the other day. Okay, so took advantage of it. I sold the 40 puts only for a whopping 32 cents, covered them literally the next day for a 53% return. Okay, bond short put, again, 50% return over here. It's the 151 puts. Bond short call, 167 calls covered for a 50% return. Okay, we're getting recent enough. This is a Tesla short call. This is actually done effectively last week. It's the 1325s. Okay. Then we actually come into the Tesla, again, Tesla short call. Then we go to the QQQ short call, 54% return. Amazon short call, forgot about that one. This is actually a 63% return. Okay, huge skew, by the way, inside of Amazon on the call side coming into the last earnings. QQQ short call, 50% return. QQQ short call, 53% return. QQQ short call, 51% return. And as I said, that takes us literally to up till today. If I actually pull up the QQQ, you'll see the last couple of days inside of the queue. That's the 29th, the 30th, May 3rd, May 3rd. Okay, and if you take a look, all I've done in here is just copy and pasted all of the trades, right? So when you start looking at this, there's the QQQ covering on May 3rd, right? A couple of days back over here, 29th, 30th, 30th. Okay, May 3rd, May 3rd. And again, it's like clockwork. I know, I know you just saw a ton of trades and I just threw a lot at you. The key, the key to this, all right, it's about the consistency, obviously. But the key to everything that I'm doing here is Ultima. It's specific. It's the criteria. I mean, to begin with, though, what better time to learn this? And you're going to have to spend a little bit of time learning this. You're going to learn a new skill set that'll last you a lifetime. But when are you ever going to have time like this? Most people are still working from home. Okay, if you're still, working, great. You do this pretty part-time. By the way, what I'm showing you here is really hands-off. In fact, a lot of the trades can even use GTC, which is good till canceled, which I'll talk about in a moment. But if you're still quarantined, and I know that, maybe here in the US, most of us are, free to roam about again. But if you're over in Europe, still quarantined, anywhere in Asia and still quarantined, it's a great way to actually emerge in better financial shape. Listen, a little bit about what our members are saying. I'll just give you a brief, rundown. Brent W. And I took a smattering of different dates from a while back, but Brent W. said, you won't find a more supportive and more profitable room anywhere in the retail business. Ali said, Don, help me pay for a year of TheoTrade subscription with the QQQ. Listen, if you do not have a huge amount of time, okay, every trade that I just showed today, and there's a reason I went through all the trades sequentially, every trade that I showed today is actually displayed live at TheoTrade. Okay, when I say displayed live, like literally, this is what I mean by displayed live. Excuse me. There's a portfolio. You can see literally everything we're doing, okay, in every single position. So all the trades that I just covered, there's opening trades and closing trades. Okay? We literally shoot the trades out to the masses. So you can see, again, I always put usually a contract size of like 1 lots in here, but you can see everything we're doing. You can see sizes and so forth. It's fine. Like it's all there for you. So you don't have to sit in front of the computer, searching. You're like, because immediately somebody's already saying like, hey, what's Ultima? What's Ultima in there? Okay. And I think it's critical to kind of understand that selling premium is hands off, and you can actually use set and forget, which is good till canceled order types to cover positions. And I think that's important as well. Even a fraction of your time is enough to see good results. All right. And again, this doesn't have to be glued to the screen all day long, each and every trading sessions. Now, there's some characteristics of selling Ultima Premium that you need to be aware of. So the attributes of selling high probability premium are undeniable. So you never have to buy or sell the stock. Risk is limited to precisely your comfort level. And that's where, when I talk about risk and precisely your comfort level, I'm losing my voice here. When you talk about risk and tailoring it to your comfort level, you treat a $2,000 account different from a $5,000 account, different from $1 million account. When we talk about returns also makes a difference on the account size and, margin. Everybody's worried about margin. Again, we're going to reduce that margin requirement, okay, to a mere fraction of what it once was. And again, be able to dial in that risk to your comfort level. You're never going to use a stop order either. I want to make that clear because people go, do I put in a stop if things go against me? No. Because you have that card in your back wallet that says, there's my hedge. I throw my hedge out on the table. That's your risk reduction. You don't need to stop if you've actually got a hedge in place. You can actually vary the timeframes to minimize your risks. What that basically means is you're not going to go out and just lump this all on in one day and be like, okay, bring in the premium. Okay, you do this slowly, incrementally. The probability of profit is extraordinarily high. You're not going to have to monitor the positions every single day. It is a perfect strategy to enhance the existing portfolio. If you've got a portfolio of stocks right now and you're not doing anything in terms of selling premium, okay, you're completely missing the boat. Like I'm telling you right now, seriously, if you have a 401k, you can sell premium against your 401k. It is not going, okay, to raise the risk level for you at all. You have a portfolio, you own the stocks. We can show you to sell premium against that existing portfolio and not incur more risk. And it has nothing like you're like, I can't touch my 401k. Can you see your 401k? Can you see what's in the prospectus? Then we can sell premium against it in a separate account. Okay. And again, don't worry about margin. All right. We'll mitigate that. This is an excellent tool for those seeking returns to build an account. New products allow for the sale of options in nearly any account size. Listen, building a portfolio of options, do not let the options portion of this intimidate you. Okay. Selling premium can be done from minimal credits and minimal risk. However, the sale of premium, okay, I always say this, it's analogous to a massive power saw. Selling premium is going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you don't sell premium right, and you don't hedge, you're going to lop off a couple of fingers. It's the same thing as if you went out and build a house. You could use a handsaw and cut through every single 2x4. It would probably take you 100 years to build a house, or you could probably use a power saw. But if you don't know how to use the power saw, obviously you're going to lop off a couple of fingers. It's the same exact thing with options. Again, quick, fast, safe, easy. But you have to hedge, and you have to understand what the hedge is. You can sell Ultima Premium and minimize risk. Again, if you don't have options, if you have limited experience placing trades, do not let the options portion intimidate you, okay? You need these strategies for the foreseeable market future. Today is just a glimpse of some volatility. I don't even know how today is going to end up. Neither does anybody else, okay? Just a glimpse of some volatility today. Things got a little scary, a little bit scary, okay? I'm telling you, you're going to need this for the foreseeable future, right? Because all it's going to take is one big down move. What do you think it's going to take to scare, okay, the rest of the chickens out of the marketplace? 10%, 15%? Sure, there's going to be dip buyers. They're going to come in there, rescue the market. Everybody's looking for, Jerome Powell to the rescue, okay? Listen, Jerome Powell's not going to be to the rescue. They've already talked about how they feel. Literally, the Fed feels the marketplace might be a little bit overvalued. We come down, they're probably going to, hey, I got a smile on my face. See, there's no inflation. The market came down. The Fed is literally rooting probably for the marketplace to cool off. We don't know that definitively, but I'll tell you right now, okay, couldn't possibly hurt. And yet you, all right, are going to be left pretty much holding the bag of risk. Sell premium, mitigate exposure. That's what this is about, right? Again, we can show you how and when to sell premium in a matter of a few hours. TheoTrade, what we do here is create detailed recipes for every strategy, including selling premium. And what that basically means is you wouldn't bake a cake without a recipe. Maybe you would if you've done it, 30, 40, 50 times in a row, but most people wouldn't bake a cake, all right, without some type of a recipe. You have to have some methodology. Somebody already asked me in here, well, get to the Skew, man. How do you actually find Ultima? Okay. That's what these recipes are. As I say, be prepared, not scared. Listen, this is what you need to know to successfully sell Ultima Premium for a living. Okay. And when I say this, like now we're actually going to give you, some of the nuts and bolts behind it. What underlyings, stocks, or indices, make the best Ultima Premium selling candidates? When you think about candidates, what did I trade? What did I trade a moment ago? I traded some Tesla. I use Tesla as an example. Tell you what, Tesla, that's where danger lies. Use a little Amazon in there. I traded some bonds. I traded some IWM, traded some QQQ, traded a little bit of spiders in there. Again, I'm a creature of habit. I think people try to make this business far more difficult than it has to be. You don't have to trade any GameStops. You don't have to trade any insanity. Okay. You go out and you actually do what works and where the skew is actually found. All right. So in selecting candidates, I'm going to tell you what the key is. You got to know what the volatility to seek out. All right. And that's as far as I'll go in here. And have to know exactly what the volatility should be. Okay. You have to know what the volatility should be. And all right, that skew will be embedded in there. Right? What options expiration do I select? I love to show options expiration. When I talk about options expirations, this is something that, it's literally, it can't be said enough times. Look at, here, let's go over to the spiders. Look at something like the spiders, which I trade a lot of. Okay, there's 1 day, 3 day, 6 day, 8 day, 10 day, 13 day. Look how many option expirations are there. Okay, you want to get really crazy? Eventually you can step up into the SPX. You want to get crazy? Look how many expirations are in here. You got to dial this down. You got to know exactly what expiration to key into, because people are asking the right, where's the skew? Where's this? The expiration is the skew. The expiration is the skew. We dial in the volatility to help dial in the expiration. Okay. Then we dial in the delta. So to find skew, we actually back you in to the trade. What do? Find the right volatility. You have to have constraints of volatility. Too much volatility, you're already dead. Too little volatility, ain't worth selling. We got to dial you into the right volatility. Then from volatility, you got to find the right expiration, because the right expiration, the skew is there. Then we actually go and the right delta. What's the delta? Delta deals with probability. You get the right probability, we're going to be out here on the tails. Okay, if we're out there on the tails, we're good. It's actually dialing in the skew without you having even to look at skew. What options do I buy against my position? So not only do we get you into the position, what expiration, what volatility, right? What volatility, what expiration, what the delta should be. Then you got to actually go out and buy options against the position, the hedge. How do I even build the position? This is not go out and instant coffee, instant tea. Okay. You got to bake a cake over here. Okay. You got to bake a cake. It'll take a few days to learn this, but then that's it. And then you're just up and rolling. Okay. Do we need a large amount of capital in my account? No, that's now the 7th time I've mentioned you do not need a large amount of capital in your account because you can now do this, and you can do this with very, very minimal amounts of margin. But then you have to ask yourself, what's the right amount of risk for me? That's something I can't answer for you, but I can tell you, okay, based on how much risk you want. If you say, Don, I don't ever want to lose more than X, we just dial that in. We can tell you how many hedges to do. That's actually part of Ultima Trades, is dialing in the risk. What are the percentage returns supposed to be? Okay. And you can actually figure out percentage returns based on capital in the account. You could figure out percentage returns based on if you sell something for $2 and buy it back for $1. There's a couple of different ways to figure out percentage returns, but I'll tell you right now, okay, you got to dial that in to know when to not only be able to open the trade, but when to more importantly close the trade. How do I protect myself from market crashes when selling options? VIX vol spreads, risk twist spreads. Okay, listen, let me show exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. I use the term recipe, but the idea, okay, behind this comes from, it's analogous to a pilot, okay? And a pilot, when you walk into the cockpit of a 737, the first thing that pilot does, I mean, literally like before they even get into the seat, is they already have the checklist in their hand because they've already looked around the cockpit. They're pulling on stuff around the aircraft. They're literally going step by step by step by step. Nobody gets into an aircraft and just goes, all right, throttle up, let's go. Okay. It is an incredibly detailed checklist. It's a pre-flight checklist. That is what criteria amounts to. But then, and more appropriately, once you are in flight, so we actually take you through what I would term a little bit of a gauntlet of criteria. So after you go through X number of steps, you're like literally a mouse going through a maze, and you're like, okay, I found this trade. Now, once you're actually executed, which is into the trade, once you're into the trade, then what do? Okay, then you have to monitor it. Then things can actually go awry. So we have different variables, different criteria. What if the market goes up? What if the market goes down? What if the market stays flat? What if? Listen, TheoTrade creates recipes in trading. Trading is about answering the what ifs. What might be a good stock or ETF candidate for you to sell premium in? What is the correct options expiration cycle? How much capital do I commit to generating premium? What strike price options do I sell? Which strike price options do I buy as a hedge? How can I limit my risk? TheoTrade has the answers. Again, we build recipes with definitive criteria, literally checklists for each strategy and each unique variable. When we talk about variables, that's what I'm exactly saying. What if we go up? What if we go down? Okay. What if the marketplace crashes? Volatility explodes. I mean, today we're sitting on pins and needles in today's marketplace. All the variables you're going to encounter, dividends coming, expirations coming. What if? Okay. TheoTrade is the answer to those questions and is your answer to those questions. We'll give you the right probability for the trade. We'll give you how many option contracts do you trade for the account size? When do you actually close your premium sale? What if the stock market sells off big? Do you bail out of a trade? What if we rally massively? Can you fix losing positions? Okay. We get into like the how, the when, the why, at what price. And I'm telling you right now, it is just that we're just skimming the surface of the beginning of the variables you're going to face while actually selling Ultima options for a living. Listen, you can read about selling Ultima premium, right? Anybody can go online right now. You can Google, there'll be 10,000 pages that come up on Google about selling options premium. Maybe you've even built a couple of premium sales. That's not what you're here for. You're not here to learn what selling option premium is. You're here to learn how to zero in on criteria for Ultima trades. You're here to actually learn that Ultima, it's not just about the sale of premium. It's about the sale of premium with the right risk mitigation tactic. If you can't hedge, okay, you're already dead. Nobody's told you that. I don't mind saying that to you. What you need in this business is TheoTrade's recipe for success, okay? This is just me. It's 20 plus years of trading experience. I had access to client order flow for 15 years while both at Thinkorswim and TD Ameritrade. We've literally viewed and studied millions of trading accounts. Okay, there are several individuals here at TheoTrade that actually hail from both Thinkorswim and TD Ameritrade. It was a nice transition we made over. A lot of the data that we use on a day-to-day basis comes from what we learned in the brokerage business. Again, I ran education for 15 years at a firm with the largest option order flow in the industry. What you're seeing in terms of criteria, it comes from other retail traders' success. Criteria is the recipe for success. The following strategy and the corresponding criteria, it just requires the utmost attention to detail. We literally spent years fine-tuning this trade setup and criteria. When we approach the section on criteria, you follow the steps to build a trade, okay? We have an Ultima income generator course, okay? And before I even go into any more detail, I'm gonna tell you guys right now, we do not just sell a course for $497. So time out right there, okay? That is not what TheoTrade is about. So I do not want you to look at this and say immediately, that's it, no, okay? I can't possibly have another course. It's not about another course, okay? This is a vast differential. There is a course here at TheoTrade. It's the Ultimate Income Generator course. I happen to be the trade instructor. It was very recently recorded and archived. When I say recent, okay, it's within the last 6 weeks that we actually recorded and executed upon Ultima. We clean up the file, we get it ready. It is a 5-hour course. It's archived and available immediately. You can stream it 24/7, okay? All right, so it's 24/7 access that you can watch on a computer. You can also download it for any mobile, okay, applications, whether it's a phone, whether it's your iPad, whether it's your Android. You can actually download it. We have our own mobile application where you can download, and if you're on an airplane, you could watch it even with the internet turned off, right? But the class slide deck that includes entry and exit criteria is available immediately for download. So all of this, it's ready to go. You can literally start streaming it. Before I go any further, I just want to make something very, very clear in here. And this I was just saying a moment ago, TheoTrade, we differentiate ourselves in a very, very large way. We do not sell individual classes, okay? Being a client of TheoTrade, okay, is a vast departure from any other education firm in the business. Remember, we built the education division of Thinkorswim and TD Ameritrade before ever coming here and building TheoTrade. We've seen everything in this business, right? I mean, literally, like every education firm out there, most education firms, their whole business model is sell something for $500, right? They sell you something for $500, okay? Then you have to buy an indicator. Ooh, you have to buy an indicator for another $500. Before you know it, you have to take a class to learn how to use the indicator for the original class, but then all of this becomes obsolete and we have a new class, okay? Or another instructor, which is kind of the gimmick. And I'm gonna tell you right now, it's not what we do here at TheoTrade. Make this clear, and then I'll actually take you through a couple of the bonuses. So today, obviously we have a little bit of an incentive and a number of bonuses for people that are interested in TheoTrade, okay? What we do here at TheoTrade is, when I say a vast departure, we will just simply give you everything that you're going to need in this business, okay? The first thing that I tell you right now, okay, if you're brand new to this business, we have an entire start menu, meaning that you can take from absolute novice to the most extreme. The second thing I'll tell you about TheoTrade, okay, you get to follow our trades. So we'll get you started, okay, through umpteen different courses to be able to ramp you up. Obviously, you get access to the Ultima course. We will then actually give you access to all the trades that we are doing, specifically that I'm doing, okay, that some of our other associates are doing. Okay, on top of that, we'll give you email access to us. If you want to ask direct trade related questions, I think that most education firms shy away from trades, okay, in emails. We don't shy away from you asking us a trade related question in an email. Bring it. Who else are you going to go to? Who are you going to call? What are you going to call up your brokerage firm? You're going to wait for 3 hours on the phone, maybe to talk to somebody at Charles Schwab that isn't going to tell you anything anymore? Okay, they don't tell you anything. Okay, some people are going to come here to TheoTrade just to be able to have somebody to bounce ideas off of. That's fine. We will give you direct email support. No if, and, or but about it. By the way, we'll also give you access to a chat room where we trade live every day. We'll also give you access to every single course that we've ever done at TheoTrade since inception. It goes all the way back to 2016. I left TD Ameritrade in 2015. We launched Theo in early 2016. We give you access to everything we do. We give you access to every indicator, okay? Email access, what else do you need? If there is something you need in this business, we will give you access to it. And I tell you that right now, because I don't want you to think it's another $470 or $497 course. It's not worth just paying $500 for a course anymore, okay? There's a reason we have 6,000 people on the TheoTrade platform right now. And again, stick with me for a moment because I'm going to show you not only is there an incentive to enroll today, okay, but how much more you actually get in terms of bonuses. Here's the Ultima Income Generator course curriculum. Number one, you're going to learn how to generate consistent returns with this premium selling options curriculum. You're going to learn how to build a portfolio of high probability trades that generates consistent monthly returns, regardless of your starting capital or level of experience. Okay, we will ramp you up. And again, I know people come here and they're extreme traders and people come here that are total newbies, okay? We cover both sides of that curriculum. When I say that, absolute newbies, and we give you access to this, that, and the other, okay? This is a start here menu. You know what we do in the start here menu? We get you ramped up, okay? It's par for the course. We're gonna give you detailed entry and exit criteria for selling options premium while keeping risk at minimum. You're gonna discover option Greeks, okay? And learn how to manage your positions through one number. In the class, you're going to learn to use a risk array. It's actually one of my favorite parts of the entire class. It'll blow your mind. You're going to learn to use a risk array, and you're actually going to be able to visualize the forward future of profits and losses. Okay, you're going to be able to see profitability. You're going to be able to see risk before the markets ever move. We're actually going to teach you that the marketplace is a game of chess, and you're actually going to see the opponent and their capability of movement. You're actually going to learn how to properly allocate, all right, in a way that reduces risk, which has a very large part to do with hedging, which is risk reduction, obviously. Okay. Discover risk minimization techniques designed to hedge the most extreme market environment. So you're never going to be caught off guard. And the techniques we teach in Ultima can be used against a portfolio. You're going to learn how to sell premium in small accounts and or retirement accounts with innovative new trading vehicles that have never been available before. That's just, again, I'm skimming the surface of what we do inside of the Ultima curriculum. And that's just, yes, you get this, but you also get everything else that TheoTrade offers here, okay? The other aspect, and this is something that we've never done in the past, TheoTrade is completely and totally riskless deal. The one thing I will emphasize, if you want to be here at TheoTrade, fantastic. We want you to be here at TheoTrade. We give everybody a full 90-day money-back guarantee. I'll read it because there's no stipulations, but if you're not satisfied in the next 90 days, email support@theotrade.com and receive a full refund. There's no if, and, or, but about that. Money back guarantee stipulations. There are none. We don't do stipulations. Forget all that crap. By the way, you don't have to call us. This is not like a gym membership. People are like, how do you get out of the gym membership? You have to like give blood. Please take my blood and let me out of the gym membership. Okay. And they never let you out. Email us. If you're not happy in the next 90 days, there's just no risk whatsoever. There's just no excuse. By the way, you don't have to email us a long song and dance. Like, I get it. I get it. You want to be here? We want you here. We want you happy, though. And if you're not, please get your money back. It's okay. No excuses, no questions, no commentary needed. Just email us and ask for your money back. We do that because, again, we want people here that want to be here. We want people here that, want to learn this business. And we're going to show you the instructors and you'll get an understanding real quick. All of our instructors have over 15 years minimum experience in this business, and all pretty much are from either a market making background or a brokerage background. Okay. Go to theotrade.com/skew to enroll for it right now. By the way, theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W. Can't mess up W. So it's theotrade.com/skew. Now, as I said, there's a money back guarantee. You don't have no worry. You can sign up for the class, unencumbered. You want a bonus. As you guys are actually enrolling for the class, okay, I'm actually going to throw some bonuses. By the way, if you're curious, the enrollment page, go to theotrade.com/skew. It looks like this. Okay, you want a bonus. Okay, TheoTrade, as I said a moment ago, goes beyond one class or one indicator. Like, we get this. Like, you want everything to trade and invest at one place, and you want it at one price, and that's exactly what we do. Here's the first bonus. It's a quick start beginners video guide. So if you've never put on a trade before, okay, we're going to give you It's actually, I do all of the option beginners work. I actually put this video series together. We're going to give you my training. It'll take you from complete newbie to entering into your first trade. And again, I want you to see what it looks like. And for those of you, excuse me, for those of you that are a little bit experienced, okay, let's go over here to the start here menu. If you're experienced, maybe you don't need to go through options 101, options 201, okay? Look, options 101, options 201, options 301. But I will say this to everybody, okay? I spent 15 years in the brokerage world. Believe me, order execution, okay? You start getting into order execution part 1, 2, and 3. This stuff is pivotal. Change the whole way you look at the marketplace, okay? A huge amount of what we did and what I did specifically at Thinkorswim was help build an order router. So we'll give you insights to give you better trade executions. That alone is worth the price of TheoTrade. Forget about everything else we do just to learn how to get better order executions on stocks, options, and futures. Okay. You'll be blown away though, even those that are experienced, by the time you actually get to classes like Crash Course and Option Geeks, getting your risk under wraps, preparing your trading day, probability and profitability. These are just a couple of the, quick start beginner's guide. Bonus number two. Bonus number two is we give you access to over 100 classes. This is what I was saying a moment ago, is like people go in there and they charge you $500 and $500 and $500. Look at this. You can buy the classes individual, Guide to Small Account Growth, In-Out Spreads. Okay, that's probably the most prolific class we've ever done here. Guide to Surviving and Thriving Extreme Volatility, Back Spreads, Growing a Small Account. Okay, How to Collect Income Being Short, the next big short. That's the Risk Twist Spread. Guess what? That class is your hedge. That class is actually going to teach you the hedge. Okay, I'm not done yet. Iron Condors class, Sell Premium, Minimize Risk, Day Trading. We have day trading courses. If you name a genre of trade, we have a course on it. And all of this, it includes the Ultima Income Generator. I don't want to move away from that because that's what you're here for today. You're here to learn about Ultima Income Generator because right now, okay, Skew is what works and Skew is in play. And I just want to give you an idea. What does this look like? Okay, here are the option classes. Option classes, option newbie classes. Actually, this is all the classes: technical analysis classes, day trading classes, stock classes, futures class. I apologize in saying options classes because there's just pure stock classes here as well. We even have classes based on mindset. Okay, if you're curious, listen, I'm the option geek here, right? If you're curious in what option strategies look like, here's Ultima right here. Okay, that was the most recent class that we did. Tracking unusual options activity, gamma irons, controlling your risk, back spreads, volatility crash course, black book spreads, okay? Guide to Surviving and Thriving in Extreme Volatility, part 1 and 2 here. It's actually a big one, all right? And it goes on and on. I mean, all of these classes, you have access to all of them from day one. And I know that some people look at this and goes, a little overwhelming. You know what, okay? You have to find your place in this business and the right genre of trade for you. Yeah, you're here for Ultima trades. But you might find you like day trading, NASDAQ futures, and we have classes on that, okay? Bonus number 3, by the way, so we give you access to every class that we've put together, and every class has finite criteria, literally step 1, step 2, step 3, okay? Bonus number 3, an all access TheoTrade VIP membership pass free. It's 3 months, unlimited access to TheoStream. What do we do in there? We just trade live. We broadcast minimum 6 hours per day. We're broadcasting live throughout the course of the trading day. So time out. You don't have to sit in front of the screen all day. Okay. You do not have to sit in front of the screen all day. This is not like, but some people elect to do so. And if you do, that's fine. Okay. And I'll tell you right now, we're broadcasting live as we speak. You're like, what is it? What does it look like? This is TheoTrade. I say we're broadcasting live. Apparently we're waiting for somebody to broadcast. Oh, they're switching right now. Okay. We're right at the top of the hour. Okay. Again, I bet you if you wait a couple seconds, there he goes. I literally caught him like getting ready to broadcast. So the next TV is about to play. This is going to be Corey Rosenblum. And Corey Rosenblum is now going to be broadcasting live here momentarily. You see his screen, okay? And you'll see every execution that he does. All right, where the S&Ps are, all of this is done live. All the trades are called out live. And by the way, down below over here, okay, these highlighted, these are actually us. These are us in the chat room discussing trades. There are several thousand people in there a day. We give you access to this. We also give you access to text and push notification. Allow me to express this. I know that you can't sit in front of the screen all day. Everything we do here at TheoTrade is recorded. But if you can't watch all day, you're like, how do I get these trades? We do text and we also do push notification. Push notification goes to our mobile device. So it literally like, the mobile device, okay, whatever the mobile device of choice you may have, we actually can push directly to your mobile device. So by all means, if you're not capable of watching all day, we have 5 distinct trading portfolios. And again, you can kind of watch and gather quite a bit. If you're curious what the trading portfolios look like, okay, people, they could not be more simplistic in context. Let me just pull one up. Okay, here you go. This is exactly what I showed you earlier. This is a trading portfolio. Just show you every single trade that we've done, the execution time, all of it, right? It's complete full Monty on here. So that's bonus number 3. Here are the instructors, by the way, that built all of the classes. There's 100 classes in here. I didn't build them by myself. It's Jeff Bierman. Jeff Bierman also worked with us for 7 years at both Thinkorswim and TD Ameritrade. He's an analyst, trader, and former chief market technician. If you've ever been on the Thinkorswim trading application, Jeff built over half the studies on the Thinkorswim trading application. So Jeff Bierman is also a professor of finance at Loyola in Chicago. So he is a professor and he only teaches right now. He's doing about 2 courses, not a huge load. So he's actually teaching 2 courses in finance at Loyola, and he kind of moonlights with us here at TheoTrade. I mean, again, I've known Jeff now, well, we're going on about 12 years. Next in the docket, Matt Williamson, market neutral premium selling options strategist. Corey Rosenblum, our senior strategist and resident swing trader. You know what? At this point, it's also important to tell you that we actually have 3 CMTs on staff. Corey's a CMT, Jeff Bierman's a CMT, and obviously Brandon Chapman's a CMT. Most firms are lucky, most big firms, when I say big firms, I'm talking trading firms, are lucky to have 1 CMT on staff. We have 3. Corey Rosenblum, he's a swing trader. Okay, this is the guy that's actually live literally right now. He's our resident swing trader. So if you're looking for a slightly different genre of trade than Ultima, fine, that's Corey Rosenblum. Next in the docket, Brandon Chapman. He's a CMT, macroeconomics, technicals, and fundamentals. If you haven't noticed, everybody has their own pigeonhole and their own genre of trade. Brandon also worked with us at both TD Ameritrade and Thinkorswim. Brandon used to write the course manuals for education at TD Ameritrade. There was even a course. They charged $24,000 for an 18-month course at TD Ameritrade. Brandon Chapman actually wrote the book. So we brought Brandon on board right after we started. Of course, TheoTrade is, again, he kind of wrote the book, if you will, on options. Steve Slim Miller, 43-year veteran stock options and futures trader. Steve is also our Slim Miller. He's our in-house resident psychologist, which we'll talk about here momentarily. Then we have Tony Rago. Tony trades one product. He's NASDAQ futures. Okay, intraday strategist. All he does all day is trades on an intraday basis. Blake Young, market profile, futures, currencies, and commodity trader. Blake is actually also from TD Ameritrade and Thinkorswim. Blake and I go back about 15 years. So there's some experience. There's obviously some depth inside of this crew, in addition, of course, to myself. Onward and upward. By the way, this is a quick glance. We're all predominantly working from home as of late as well. Nevertheless, you can kind of get a feel for some of the crew over here. This is just a few of the instructors, few of the support staff working here at TheoTrade. Okay. Next, access to 59 proprietary indicators and scans. Anything, okay, that is a scan that we would build, we relinquish that to you immediately. We don't hold anything back. We don't sell scans. The expected move. See auto expected move? We're going to give you the link to that here in just a moment. S&P, gravity points, okay, done. You get all of it. Again, if you look at my screen, okay, there's a couple of different studies that I use on a day-to-day basis, like Quantix, okay? You get it. From day one, you actually get all of this. It's just part of TheoTrade, right? IV rank, unusual put options activity, SPX expected move, which we update weekly. It's access to another $1,800 plus in indicators and scans. We just give it to you, okay? Bonus 4, Theta Live portfolio. I've already showed you this a couple of times, but this is new. This is actually new. The Ultima Premium Selling Portfolio was only launched, okay, in late December, early January timeframe, when Ultima Trades kind of became its own course. We actually built a portfolio around it. It's completely no holds barred trading approach. You can see everything that I do. When I say everything we do, okay, we even show you account statements in here. So everything from the monitor tab, listen, okay, the P&L for better for worse. You're going to see days I'm up, days I'm down. By the way, just to be fair, I like to aggregate both accounts. You're going to see days that I'm up, days that I'm down. Today, markets are down. I'm actually up about 15,000 bucks. It's par for the course, okay? But again, you get to see full disclosure on all trades, all opening trades, closing trades, hedging positions. You're going to watch myself trade and discuss positions really like never before. We also have in Theta small account portfolio. And the small account portfolio, I actually keep in a completely separate brokerage platform called Tastyworks. And I do this to differentiate. Okay, so I'm literally differentiating on a different platform over here. And this is for smaller accounts. If you have an account of $2,000 or $5,000, you're going to follow the Theta small portfolio. We even shoot videos on a weekly basis about this. Here's the Theta portfolio. Okay, and we do a weekly update. So if you can't tune in anytime during the week, there's a 15-minute video done every Friday that you can tune into. Literally in 15 minutes, you're up to speed. Okay, so I want you guys to know that. So please understand that that is kind of par for the course in there. All right, moving on over here. Number 5, technical analysis toolkit. So I am not a market technician. I am much more a quantitative trader. Jeff Bierman is kind of our resident in-house market technician. He actually has an entire technical analysis toolkit. You're granted access to that pattern recognition, and there's 21 other technical analysis classes, but you're going to love his stuff like on MACD, time-based trading systems. Again, the classes here, I can't say enough about them. In fact, I'm going to show you another one here. Number 6, this is bonus number 6, day trading treasure chest. For those of you that do want to sit in front of the screen throughout the course of the day, okay? Tony Rago is probably your guy to go to. Intraday trading NASDAQ futures. We have a day trading S&P futures blueprint. These are for futures traders, but then we actually get into those that want to trade options on an intraday basis. High probability intraday trading system, 11 other day trading classes, okay? This class, bonus number 7, mindset mastery. That's actually Slim Miller's class. Let me just tell you, when this class first came out, okay, we didn't know what else to do. We charged $1,000 for the class. It's before we actually came up with this. Everything's included here at TheoTrade, everything. Charged $1,000 for this class, it's totally worth it. If you just came to TheoTrade just to watch that one class, it's gonna change the whole way you feel about the marketplace. And I'm telling you, yes, I'm promoting somebody else's class here at TheoTrade. Why? Because it's that damn good. That guy has forgotten more about risk management than you and I will ever know. He started trading, okay? Before puts even traded, Slim started trading. He started trading in the early 1970s. He was actually one of the first to move from the market floor. He was a market maker behind screen trader. He's been a retail trader for longer than any of us. He actually goes back to the time when you still had to phone trades in, and he had a pipe running into his house with the screens in front of it. Literally one of the first screen traders. Guys will absolutely love his course. It's the 5 essential building blocks to successful trading. Okay, 43-year veteran Slim Miller. Number 8, it's a quick start guide to Ultima trades. Ultima trades, we actually built, if you will, a Cliff Notes version of it in a PDF file. We give you that immediately. So it's a quick start guide to Ultima trades to get you up and trading almost immediately. All right, a little bit about what our members are saying. This comes from Jeremiah. It says, my first 4 trades following exactly the details in your Ultima class, okay, just closed out using GTC orders, set right after getting into the trade. This paid for your class in less than a week. I'm very thankful. I subscribe to your services. Keep up the good work. Thanks, Jeremiah. All right, listen, TheoTrade includes everything you're going to need to invest and trade. There's classes, there's coaching, there's email access to the instructors. Don't forget, you can email us. There's a live trading room, indicators and scans, mobile access. It's everything that you're going to need. I mean, literally, when we sought out to build TheoTrade, we tried to build like the Netflix for traders, like every genre, something for everybody. And that's what it is. It's $297 for 3 months. I know that's everybody wanted to know. Total Theo is $297 for 3 months. Before I go any further and kind of detail everything, remember, there's a money back guarantee. Just go to theotrade.com/skew. S is in Sam, K is in kick, okay? E is in echo, W. It's $297 for 3 months. It is not, okay, a membership. This is not a membership. And I want you guys to know that right off the bat, okay? It's not a membership. After 3 months, if you want to do it again, you pay another what? Another $297. So it's also, this is not an introductory price. So that $297, swing and a miss. Okay, the $297 for 3 months, that's it. And if you want to do it again, it's another $297. If you want to do it again after that, it's another $297. We don't do like an introductory price. We ask you, okay, at the end of 3 months, you like it, you're happy. Remember, there's still a money back guarantee in the first 3 months. We have over now, well, deep into 6,000 plus TheoTrade individuals on the platform. And on the platform, and again, you can watch like and talk to any of the other clients in there. There's a full money back guarantee, and that includes everything we talked about today. It's Ultimate Income Generator course. It's available immediately. Access to over 100 other trading classes, all available immediately. Okay. They're on demand. We even do new monthly classes. And there's a new class coming out really soon. The new class is actually going to be from Matt Williamson. He'll be the next one up. Live trading chat room. Traders provide real-time trade ideas, market insights. We broadcast 6 hours a day, 59 proprietary indicators and scans. There's text and push notification, 5 separate portfolios. There are daily coaching sessions. What's a coaching session? Okay. It's actually going to be provided by Professor Jeff Bierman. Okay. So Jeff Bierman's actually going to come and do a coaching session every day and give you continued education, stocks, options, and futures. And again, we directly answer your questions via email. It's theotrade.com/skew. One more time, I just wanted to reiterate, TheoTrade is completely riskless trade. It's a 90-day money back guarantee. By the way, there's a question on there. Okay. Yeah, no, it's just $297 for 3 months. Okay. And oh yeah, I mean, you can do it for a lifetime, I guess. $297 for 3 months, and then keep enrolling every couple of months. That's fine with us. It's absolutely fine with us. So I'll answer a bunch of the questions here momentarily. So it's a completely riskless trade, and we do this because, again, we only want people here that want to be here. And I hope that makes sense to everybody, because in building a business, there's a couple of things that I don't like. I can't stand gym memberships that you can't get out of. I cannot stand the idea of like, a membership that's just reoccurring monthly revenue. Forget all that. It's $297. After 3 months, do it again if you want to do it again. There's a money back guarantee. If you don't like us anytime in the next 90 days, for whatever reason, it doesn't matter. No excuses. Stuff comes up, man. Life gets in the way. You know what's funny? Once in a while, somebody will just be like, okay, I'm going to be away for the summer. Stop membership here. And then they'll always be back. They'll be back 3 months from now. I promise you, you'll be back. Nobody ever leaves. And if you do leave, they all come back. There's no excuses, no questions, no commentary. Okay. We understand life sometimes gets in the way. It's been a crazy like year plus. All right. Listen, if you receive a refund, keep bonus number 1 on us. Bonus number 1 is the start pack. So again, there's just no stipulations whatsoever to the money back guarantee. Get to TheoTrade now. We're going to work with you directly. We give you 50 spots on the TheoTrade riskless deal. And I don't mind saying this. That is to incentivize you to enroll for it now. The other thing is, okay, we have like 700 plus people on live today, okay? And there are 8 full-time instructors. That is a lot of emails to answer. So what we basically do is to incentivize you, obviously, to enroll today. We give you the riskless deal if you enroll today. If you enroll now, there's 50 spots in the riskless deal because we give you unlimited email mentoring. And again, it's pretty intense. We actually like that side of the business, though, where we just sit and we answer emails, a couple hours a day. I broadcast a minimum of an hour a day. Minimum of an hour a day I will broadcast. Tomorrow morning, I'll be on very first thing right at the opening bell. And the $297 riskless offer, the $297 riskless offer, it's never been available before with Ultimate Income Generator plus the Theo Theta portfolio, but we changed it. There's no stipulations on the money back guarantee. We used to say, oh yeah, you have to do this and do a little dance, make a little love, get down tonight. There's no stipulations. Okay. You need to see what we do. Okay. And what we're doing, we give you everything that you're going to need to trade, to invest. I mean, everything to support you in this business. Listen, if you're going to get it done in the markets, okay, you're going to get it done here because that's it. There's nothing on the educational side. You can go anywhere you want. You can spend $20,000, $30,000. You will not find anything comparable to what we have here at TheoTrade. And I'm serious. We put our money where our mouth is and say, put up the $297. If you don't think so in the next 90 days, get your money back. What our members are saying, This one actually comes March 30th, a little bit more recently. Hey, it's from John. I closed year-to-date profit from Ultima Trades has paid for my yearly TheoTrade subscription. Nice. Thank you from John. Okay. Here's everything that's yours today for 297. Ultimate income generator. Bonus number 1 is the start guide. Bonus number 2 is access to all the classes. Bonus number 3 is access to our chat rooms. Okay. And the VIP membership and the text and push notifications and email access to us. Bonus number 4 is the Theta live portfolio that's actually following specifically my trades. Bonus number 5 is the technical analysis toolkit. Bonus number 6 is the day trading treasure chest. Bonus number 7 is the mindset mastery from Steve Miller. Bonus number 8 is the quick start guide, okay, to Ultimate Trades. Go right now to theotrade.com/skew. In fact, I'm going to take you over there here briefly. Here's theotrade.com/skew. If you actually pull this site up, and again, I'm going to throw this in front of you so everybody has it, theotrade.com/skew. Again, S is in Sam, K is in kick, E is in echo, W. The reason I wanted to put this up there are 50 riskless spots left. It takes me about 5 to 6 minutes before I actually see your name populate in here. If you're curious, if you're in those 50 riskless spots, I will read off just your first name and your last initial. I'll read off your first name and initial, let you guys know that you're actually into the riskless spots. One other aspect I wanted to bring up, and one of the reasons I bring this site up, again, when you click add to cart, okay, when you click add to cart, billing information, first name, last name, email address. There's one thing, and everybody thinks that's kind of peculiar, your phone number. Put your phone number in, because that's how we actually enroll you automatically for text messaging. Do not freak out. We're not going to send you a lot of text messages. If you are overseas and you cannot receive US text messages, not a problem. Then you just simply download the TheoTrade mobile application, and that will do push notifications, and that'll reach you anywhere in the world where you can access the internet. So that's why the phone number's there. The other aspect, and this is of critical importance to me, it's a single payment of $297. We are not enrolling you for a membership in any way, shape, or form, a single payment. By the way, you can also break down the payments if you want. That's up to you. If you don't want to give us, $297, whatever, doesn't matter to us. You can do $100 a month for 3 months too. That's fine. It's a par for the course. But I just wanted to show you that because people get a little bit uncomfortable with that. And again, the whole reason that we have $297 no membership is to make you feel comfortable, and that's why we also do the riskless trades over here. Also, for those of you that stay tuned, you can actually download on the bottom of this page auto expected move indicator for Thinkorswim. So people always are asking for that. Again, if you're enrolling right now, you need not worry about downloading that indicator. It's on our site. All the indicators are on our site. So it's theotrade.com/skew. As I said, I'm going to answer a couple of questions. Again, I just want to show you again, this is TheoTrade. So as you guys are signing up for it, you're looking at TheoTrade. I'm just going to refresh this screen. Okay. This is Corey Rosenblum live.
What happened? That's how we game plan. That's how we strategize probabilities, and of course the trade just.
And just get a quick feel for that. I don't want to listen to Corey for the next. Well, he's on for another like 40 minutes or so. Close that up over here. Again, we're going to answer some generalized questions. They didn't get into some very, very specific questions over here. What our members are saying. This one comes from Jeff R. Don, I wanted to drop you a quick email. I think the class is wonderful. I've been stretched each session, not beyond my capability. After each session, I watch the recording, okay, and do the homework. I feel each week that my knowledge of options trading is growing steadily and rapidly. I obviously can't speak for my classmates, but it's going well for me. Thanks for the great instruction, Jeff. Okay, this one comes from Todd Summerall. Now, the reason I threw this in here, I'll be really specific. We answer trade-related questions in emails. Again, where other education firms shy away from this, we go head on. And I'm telling you, Ultimate Trades, okay, and what we do here at TheoTrade is going to change the way you feel about this entire business. This comes from Todd Summerall and says, don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. Okay, you told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay. You can use this if you want. And I did. Now, the reason I bring this up is we don't mind going out on a limb and saying like, listen, you got too much risk. You don't smash this, you're going to be done. And that's part of what we do here. So again, just keep that in mind. Email us, support@theotrade.com. A couple of general questions answered, and then I'm going to get into some specifics over here. I promise I won't be more than a few more minutes in terms of today, as I'm way over in time. But people always ask us, what do we need to get started? You need a laptop. A laptop, or you know what? You can even use your iPad. Again, I'm reading your questions off of my iPad. I'll also read your names specifically off of here. Again, as you enroll for the riskless spots, okay, I will actually read off some individual names just to let you know that you are in fact enrolled under one of those riskless spots. Okay, so we will give you everything that you need in this business, pretty much from A to Z. Like if there's something that we're not providing you, and I'm dead serious with this, let us know. Like, you know, in terms of education, in terms of support, let us know. That's what we are here for. Okay. Number two, this is not a membership. We're not going to auto renew or bill you again. I always let people know that. It's about the fourth or fifth time I've said that. Number three, we provide weekly Theta videos so you can follow all the moves we make. In about a 13 to 15-minute video each week, we give you an update on what I'm doing in the portfolio, every move that I've made, why I made the moves, and what you can jump into, because some people can only tune in once a week, which is fine. And again, that's what we're here for. Number four, TheoTrade archives everything. Okay, we understand you can't watch through every single trading day, every single session. Every detail of everything that we ever do here at TheoTrade is recorded. Every nuance is recorded. You can even, on number five here, you can actually download TheoTrade Mobile and view at your leisure. But what's cool about TheoTrade Mobile is you can actually speed up the replay. So when you're on TheoTrade Mobile, you can say like, I want to listen to Don at 1.5 times the speed instead of an hour. You just cut your listening time down to 35 or 40 minutes, depending upon what speed that you would like to actually watch the replays. You can do that with the Ultima classes, anything. Everything is archived. Everything is accessible via mobile. Everything is accessible on our main platform, which is PC, Mac, you name it. Obviously, you can see them on an Apple device, but I've got pretty much every device sitting off to my left over here. Add your cell phone number, as I was saying a moment ago, and it'll enroll you for text messages. Download TheoTrade Mobile for push notifications. By the way, again, it's theotrade.com/skew. You can email us anytime. You'll receive a response within 24 hours. Hey, I just want you guys to know, email us. Like, seriously, if you paid $297, okay, I don't mind saying this. If you paid $297, okay, and just emailed us a couple of times, is that worth it? Okay, is it worth it? When I say that, I'm not trying to be facetious in any way, shape, or form. It's when I say, is it worth it? Is it, you have nobody else that you can bounce ideas off of. That's what we're here for. You can actually bounce real trading ideas from us in real time, but you got to give us 24 hours, because if I don't put that in there, I just filled a trade. Clearly, I just filled a position. Woo-hoo. 35 minutes to go to the cash close. Sell side activity might be kicking in because volatility just picked up. We're going to see 24 hours. People will email us with like 5 minutes to go to the close. They're like, help me get out. I'm like, come on, man. There's 5 minutes to go to the close on a Friday afternoon. We trade. Give us 24 hours. We'll get an email back to you. Number 9, you're going to gain access to everything we've ever done here in the previous 5 years. Classes, coaching, live trading sessions. It's all searchable. We actually have like our own search engine built on the site. Name a trading topic. We have an archive on it. It's all there for you. Number 10, variations of trades available inside of an IRA. So you can do variations of these trades inside of an IRA retirement account with as little as $2,000. Number 11 here, at TheoTrade, we can help you get approved for options. Listen, this is a sticking point for some people. We'll help you work your way through the brokerage gauntlet. No problem. Number 12, remember, there are currently 50 riskless trade spots available. Get results, take action, enroll for TheoTrade now. Again, it's theotrade.com/skew. I am going to go ahead and I'm actually going to pull up, first of all, this page. Okay, I'm going to pull up this page and I'm going to answer some of your direct questions in here. So by the way, I'm going to read off a couple of names and then I'm actually going to dig directly into the questions. Charles N. from Tennessee, Kevinder M. from Florida, Nityam J. from Texas, David B. from Texas, William B. from Arizona, Francios R. from California, Thomas G. from North Carolina, Jean-Claude from Maryland, Lisa S. from Pennsylvania, and James P. from Massachusetts, Kirk J. from Indiana. Again, it takes me about 5 minutes before I actually see. I know that some people are enrolling right now because I can see it, but it takes me about 5 minutes before I actually I do see the name populate on here. I'm going to read off some of your individual questions and answer a few of those. Again, if you have more questions, you can fire them into the chat room right now. We've actually got a couple of support crew that are in there helping out. As I said, it's TheoTrade.com/skew. Let's get to a couple of the detailed questions on here. By the way, Michael said, can you provide a formal definition of exactly what skew is when trading options? Okay, the formal definition of skew is the differential between out-of-the-money puts and out-of-the-money calls as defined by implied volatility. And skew actually uses the symbol SKEW, which ironically is, I mean, you're kind of curious about, why we use TheoTrade.com/skew is because skew's, well, that's how we're making money right now. But that symbol of skew, what skew does, it actually uses out of the money. It actually uses a huge array of out of the money calls and puts in the SPX to define a physical number. That number, if it's high, is a much larger skew. That means the out of the money puts are trading for a premium versus out of the money calls. Okay, we have hour-long videos specifically on that inside of TheoTrade though to help you out a little bit more as time goes on. Okay. I like this. Somebody said, can you handle my portfolio if I invest 5,000 to 6,000? Okay, so in early in my career, I managed over $300 million. I'm no longer interested in money management, and I won't be interested in money management in the future. So I've had offer after offer. In fact, we live now in, I'm broadcasting live here from Scottsdale, Arizona. We're just back here in Scottsdale wrapping up a couple things. We're going to head back to St. Croix. St. Croix is kind of the home to a lot of large hedge fund managers and so forth. The hedge fund managers that live in our community, they're so inundated with money right now. Think about this, okay? The bar to be able to get in, okay, is about $5 million minimum before they'll even talk to you to be able to even get into some of those. But I have no qualms in saying I have no interest in money management. Again, give up all my brokerage licenses and I'm loving every minute of it. Okay. I like doing this. I like answering emails, but you're always going to be better off as a self-directed investor. And that's one of the reasons why I don't manage capital. Okay. Do I sell index options? Yes, but I strongly urge you to use ETFs. Okay. When and where possible, but you will see me use significant amount of index options. Okay. By the way, Timothy said the hedge scares me. I don't know what to do with it. Okay, when to close the hedge, when to open the hedge. You will, sir. You will. That's exactly what some of the courses are about here in Ultima, is that we're going to walk you through the hedge. Listen, you don't have to worry too much about the hedge. Knowing it's there, okay, and knowing its profitability capacity is the most important thing. People, you're not going to try to time a hedge. Should I take this off? Should I do this? What's the hedge there for? It's good to know, okay, that if you're in an airplane and maybe that you have a parachute in the plane, that's what a hedge is. You got to know that that hedge is going to be there for you in case the plane fails, right? In fact, you have to know what the hedge can be worth, and we walk you through all of those concepts, Timothy. I think that's important. By the way, somebody said I'm new to options. How can I get up to speed? All right, sounds like a foreign language. That's exactly what the options 101, 201, 301 are designed for. All of those like intro classes are designed specifically for that. So making sure we're good here. Anyway, onward and onward up from there, because that's, as I said, that's exactly what those introductory classes for. That's the entire start here menu. Okay, next one. I said on a $1 to $2 million account, my question is, what's the best scalable system for a significant return on investment? Simple set of rules. Yeah, so I'll make that really, really clear, regardless of account size. Ultima right now is what's paying by far the best, and it's scalable. Okay, in terms of Ultima, show you a quick glimpse. This is a portfolio margin account. I'm only tying up $81,000 right now, and you could do some serious damage. Okay, with $81,000, portfolio margin gives you so much flexibility and so much more buying power. But that's something we discuss quite in detail in the course itself. You'll have no problem making the ultimate trade scalable. Okay, next one on the docket here. I have a very small starting account. Need to accumulate the necessary knowledge to go forward. Also, it's difficult to access brokers. U.S. options require 25,000. If you live outside the U.S., listen, don't worry too much about the brokerage side of the business. There are some big changes on the brokerage side of the in the brokerage world that we can actually help you through, whether it's U.S. broker or not. A lot of people are not aware, but there's actually a large European firm that just purchased an American firm here. And that is going to change the scope of Europeans being able to trade in US markets. So by all means, get aboard because it's going to be big. Oh, I like this. I usually close winners too soon and let losers run. Can you help me? Okay. That's not going to happen here with Ultimate Trades. As long as you'll follow some of the criteria, okay, you're going to execute upon very specific, okay, guidelines and stay within those guidelines. And I hope that helps out to some degree. All right. All right. By the way, will this allow me to scale up to generate a more full-time income? Yeah, but it's going to take some work. You're going to take a little bit of work, a little bit of time, but you can scale Ultimate Trades as far as you want to go, depending upon how much capital that you have inside of your account. And I mean, again, this is what is the hottest thing in this marketplace right now in terms of where Edge happens to lie. Okay. Oh, somebody said, how much lag time do I have before I need to act on any of the trade ideas and the notifications? You know what? The ultimate trade. So there's a couple of different emails that we actually send out. Okay. Let me see if we're okay here. There's a few emails we send out, different strategies and so forth. But when it comes to the ultimate trades, probably the most hands off. I mean, like literally, it is the most hands off. If you miss something in the Ultima portfolio, I venture to say most trading days, not every trading day, but most trading days, you'd be able to enter the position 2-3 days later. Listen, we're not selling stuff that's moving around like crazy. We're selling way out of the money options premium, stuff that's like so far out of the money you can't even see it. And that stuff doesn't move around nearly as much. And if it doesn't move around, maybe 2 hours, 3 hours pass, maybe 2 days pass, it's not going to move more than a couple of pennies out there. All right. Next in the docket over here. And again, I want to make sure that everybody's questions are answered because that's what this is about. By the way, somebody said, I like this. Cindy said, also, if you don't have a broker that lets you trade naked calls, can you sell a call? Okay, and then buy another one. So Cindy, I'm going to be very honest and say this. Yeah, the brokerage firms right now, depending upon who you're trading with, okay, we might suggest changes in the brokerage firm. There's huge changes going on right now in the entire brokerage industry. Certain firms are clamping down more and more and more on risk. We just don't like the way it looks. Yet there's several other smaller brokerage firms that are just expanding. One of them, which was recently purchased for $1 billion. It's actually a unicorn brokerage firm, and they allow capacity to do anything. And that's something that we'll get more comfortable with. But I actually discussed that in specifics in the Ultima course. So I don't want to tie you guys up too much. By the way, somebody actually, William said, since one cannot sell naked options in an IRA, will the program still work? The answer is this: you absolutely unequivocally can sell options naked in an IRA. And if you know how to do it correctly, won't tie up a lot of capital. It's not going to be cash secured. Okay. There is now a way to sell premium naked inside of the IRA. Okay. I don't mind showing you because I'm doing it. This is an IRA, right? Full disclosure. This is an IRA. I only have $60,000 in this IRA, but people, it is an IRA. So it is what it is. Close that up for a second. So again, kind of the full Monty here and what you get to see us do is, I think, important. Okay, let's go onward and upward here. Oh, a couple of more names. For those of you that are just enrolling. Donald B. from New York, Walt B. from Virginia, Martin E. from Wisconsin, Lavu T. from California, Gerald S. from Oregon, Craig K. from California, Steve O. from Wyoming, Richard S. from California, Jim L. from Florida, Mark N. from North Carolina, James T. from Washington, Alex S. from Texas, Mike C. from Michigan, Luther R. from Texas, Freddie A. from Florida, Stephen S. from South Carolina. Listen, I know I kept you guys way longer than I anticipated to. I do hope I got almost every single question answered. I know that there's a few odds and ends in here. The biggest one that I was getting here in terms of the question, though, was regarding the IRA. Okay. When it comes to an IRA, have no fear. We will be able to actually sell some premium in there. As I showed you just a moment ago, and technically you can sell naked, but this is about risk mitigation. You're going to learn some of the tactics, learn some of the strategies. But here at TheoTrade, we provide you access to literally to everything and everything that we do. If you ever need to get a hold of me specifically after today, people, seriously, don't hesitate. You can hop in the chat room first thing in the morning. Enroll today. You hop in the chat room first thing in the morning. I'll be in there. In fact, we have a big thing coming here 30 minutes away from a big demonstration of Tastyworks trading application. If you guys want to join us, enroll right now, and we'll actually give you another Zoom link, and you can actually hop into a little bit of a demonstration that we're about to do on another brokerage platform, and they let you do everything inside of the IRAs. But if you need to get a hold of me specifically, just go to support@theotrade.com. Otherwise, I'll be live in the chat room tomorrow morning, first thing. I kept everybody way longer than I wanted to. Again, I tried to read off as many names as I possibly could. If I missed some of you, I definitely apologize. I think we have, we're just 6 or 7 more spaces open in the 50. I'm just glancing at it right now. There's about 6 or 7 spaces open in the 50 people here. If I didn't catch your name in there, again, there's